Well, good morning, everybody. It's nice to see everybody here on this Thursday morning. So we'll get our May 15th work session, we'll get this thing kicked off. And the first item we have on this morning's agenda is our housing initiatives update.
So, Commissioners, while staff's coming up, and you guys can go ahead and start making your way to the podium, you had asked for a briefing regarding our affordable housing programs and, what we're doing. Is it having an impact? And so we've tried to put together some background information. We've also enlisted the services of SB Friedman to help us with analysis to where we can talk more broadly about housing, affordable housing programs in a larger, broader sense than just what we do. So we can have kind of an open discussion. So we've tried to put some information together. We'll go through that. If there's other information you want us to research, this can begin the beginning of a conversation regarding an evaluation of our program and what we're doing. And so feel free to, ask questions, ask for additional information and things that we can bring back to you to further this conversation. So
yeah, I appreciate this very much. It's just always been, at least for me anyways, I know for some others, just a question: Are we getting return on investment? Are we doing the right thing? Are there other ways of skinning the cat?
And you'll see through this. It was hard to try to get the metrics even to answer that question. And so I think it's more of an art than a science in evaluating. Certainly, there's a need. The question is at what point is it cost effective or not? And what do you do, because your economy is dependent upon that for so much of our economy. So. There's some answers. We have some information. I'm not sure we have all the answers, but staff did a good job of trying to pull this together to where we can have a good conversation.
All right.
So with that, I'll turn it over to Glenn and we'll start.
Good morning, Glenn Bailey, Interim Director, Housing Community Development. We're here this morning for two affordable housing related topics. One, as Barry mentioned, was involving the affordable housing assistance program we have. And presenting that will be Caitlin Johnson, who's at SB Friedman. Caitlin's done a lot of work with the county in the past. She's very familiar with Pinellas. And the second, after Caitlin, involves the regulatory side of affordable housing and our effort to enhance flexibility and usability of zoning regulations. Basically across the various municipalities in the county to have coordinated effort here, similar codes. And Alan Steinbeck with 3TP Ventures will be presenting that item after Caitlin. So thank you.
Good morning. Thank you, Glenn. Happy to be here with you all this morning. I'm Caitlin Johnson. I'm a vice president with SB Friedman Development Advisors. SB Friedman is a real estate and economic development consulting firm. We're based in Chicago, but we do have a long history of working down here in Pinellas County, with Fort Pinellas, and with the various municipalities. So we have a pretty holistic view of what is happening in the county. I'm excited to talk through the Affordable Housing Development Program this morning. Before we dive into some of the specifics of the program, I just wanted to take a step back. I know you commissioners are very familiar with Penny for Pinellas, Penny for Funds, but just for the good of the whole, a little bit of history regarding the Penny program. So the Penny is generated by the extension of the infrastructure sales surtax, which is that 1% voter-approved sales tax. It was approved in 2017 by 83% of the voters, and With that approval, 8.3% of the net proceeds gets allocated to affordable housing and economic development. That is then split between 50-50 between those two programs, with 50% going to fund the countywide affordable housing development program, which we're here to talk about this morning, and the other 50% going to the employment sites program to support capital projects for economic development. The Penny program is guided by the Penny for Affordable Housing and Economic Development Program guidelines, that it guides the use of funds to support county priorities, and that was developed by the Joint Review Commission, which was established in partnership with local municipal agency partners. So back in 2017, at the time of the referendum, affordable housing was identified as a pressing need in the county. And since then, what we've seen is that housing costs have continued to outpace household income growth. Since 2014, the median home value has grown at a compound annual growth rate of 9%, while median rent has grown at a rate of 5.3%. At the same time, household median income has only grown at 4.9%. This places an increasing strain on working families in the county. It indicates a continued need for investment in countywide housing affordability. Rising housing costs impact the rates of cost burden throughout the county, particularly for lower income and renter-occupied households. As a reminder for folks, housing cost burden is when a household spends more than 30% of their income on housing. Overall, 34% of households in the county are cost burdened, including 58% of renter households. And this number is up from 2017 when the rate was 54% of rental households. Looking at cost burden by AMI, or area median income, as you can see on the chart here on the right, that lower income households are more likely to be cost burdened, with those households at the lowest income brackets more likely to be severely cost burdened, spending more than 50% of their income. When a household spends a disproportionate amount of their income on housing, it leads to housing instability, leaves less room for other necessities like food, transportation, healthcare, and will reduce the quality of life. To combat housing cost burden, additional investment is needed in affordable and workforce housing for households earning up to 120% AMI. Workforce housing provides a stable home that is affordable to working families, including many entry-level and essential jobs. And as you can see here, we've outlined a few occupations at various income levels, ranging from fast food workers, registered nurses, civil engineers, so essential workers that we want to keep living in the community. In addition to the essential workers, affordable housing also keeps workers local more generally. When we were conducting research for the Target Employment and Industrial Land Study, or TEALS, for Ford Pinellas, as we've continued to talk to businesses in the community for various other projects, interviews continue to indicate that the availability of housing that is affordable to the workforce is a key component to attracting those target industries and retaining essential workers. The table that we have here shows the top 15 traded economic clusters in the county, and we've highlighted here in yellow those target industries for the county. We've noted in that last column there with the average wages, those that have an average wage less than 120% AMI. And as you can see here, several target industries have average wages below 120% AMI. And it's important to note here also that even though economic clusters may have an average wage above the 120%, it still may include many lower wage jobs that are needed to help support a vibrant economy. Therefore, affordable housing affordability at all income levels is important to attracting and retaining those target industries. So without the availability of affordable housing, employees may have to live elsewhere. We looked at data for where households are migrating to, and we see that Pinellas County loses most of their residents to Pasco County, and we think that is in part due to affordability concerns. And in some cases, employers may also relocate to be closer to workforces. Last year, SB Friedman was engaged by the county to prepare projections of housing demand through 2035. Some of you may have seen these numbers before. We use data available on population projections, demographics, including age and income, as well as household preferences. And we estimate that there's demand for nearly 47,000 additional units through 2035. This includes almost 11,000 single-family detached homes, 5,000 single-family attached homes, and over 31,000 multifamily units. Approximately 65% of the future demand is renter occupied, and nearly half is for households earning less than 120% AMI. Split kind of evenly between less than 60% AMI and then 60 to 120%. To meet the anticipated demand, the rate of housing production in the county will need to increase for all housing types, but particularly for multifamily and lower price points. Now, getting into the affordable housing development program itself, this is the county's primary tool to support production of new affordable units up to 120% AMI. The program itself supports acquisition, rehabilitation, and new construction of both rental and home ownership units for income-qualified households. The program is funded through a variety of sources, the primary being Penny 4 funds, but it is also funded with home and SHIP funds from state sources. Since 2019, the Board of County Commissioners have approved 42 projects, including 3,578 total units. Of those units, 76% are affordable and 24% are market rate. In total, $101.9 million has been approved by the county, including nearly $85 million from the Penny program, which again is the primary source of funds for the program. The program effectively leverages public and private dollars. For every $1 of program investment, it supports an additional $9 of investment through the use of, the program, the county has supported over $1 billion in affordable housing investment countywide.
Quick question. This is countywide, not just unincorporated?
Countywide, yes.
Thank you.
Of the 2,700 affordable units supported by the program, 2,381 units receive direct assistance from the program. These assisted units have land use restrictions in place and are required to comply with all of the program requirements for set-aside units. As you can see on the chart to the left, Penny 4 funds account for 83% of the county funds approved, really illustrating the importance of Penny as a source of revenue to meet countywide affordable housing goals. And without Penny, the county would be pretty limited in its ability to support housing. Additionally, the chart on the right shows the number of assisted units by approval date and construction type, illustrating how the program is being used to support housing needs each year. Compared to projects funded strictly with low-income housing tax credits or LIHTC, typically the county would get 1 or 2 of those projects each year. With Penny and other sources of funds in the affordable housing program, the county has been able to successfully approve projects each year to add additional affordable units. Of course, there is some lag between approval date and construction date, but I just want to highlight the approval date as a key milestone for projects because it is a key component getting all of the financing put into place. That is often one of the hardest parts of getting a low-income housing tax project or other affordable housing project completed. Looking at the funds in a bit more detail, you can see on this slide that 77% of program funding has been used for new construction rental, including 27 projects and nearly 1,800 assisted units. Additionally, 5% of funds were approved for new construction home ownership. That's 11 projects with 100 units, and then 17% has been used to support 4 rental rehab projects, adding an additional 482 units. Those rental rehab projects support preservation of naturally occurring affordable housing in the county. Yes.
Well, I'm like getting overwhelmed with numbers and stats right now. So, back a couple of slides, you said there was, by 2035, a need for about 46,000 units. Total units that we see, of which we've done 2,700 with 80-some% of our funds for this decade. So if we get to, say, 3,500 by the end of the decade at this rate, from our perspective, what do you see in the market out there as far as additional units that we're not capturing here? This is all in the affordable arena, but what other market units are being added on to what we're doing or we're assisting with, and how are we making progress towards that 30 or that 46,000 units?
So our analysis was just focused on looking at what the program had been able to help support. So I do not have those numbers easily available of what's been.
I think that's going to be important for us to
Yeah, looking
least
at the
get a
overall
feel.
supply.
I mean, right now, if we get to 3,500, we won't even be at 10%. But if the market itself on market rate projects are driving the vast majority, then we'll be in a decent place. So I just want to, I think that's a good piece to understand. I'm sure our Builders Association would have some of those numbers.
Yeah, absolutely. And we have that information available as well. I
you.
just don't have that easily ready right now. Another important thought there is that of that, the total demand, about half is for units under 120% AMI. Construction of those units are not likely to be borne by the private market, just due to the cost of construction and the need for assistance. So that is another reason why we're focusing on that, mostly on those lower income households. All right. I will move on to the next slide. Are there any other questions so far, since we're taking a bit of a pause?
Sure, I had a question for you on the housing burden that you talked about. Does that account for people who live downtown and they don't have a vehicle? Do you adjust that for people? I mean, if they don't have to own a car, obviously the burden's not as great on them.
Yeah, so it just accounts for housing costs as a proportion of the total gross income, but I understand that you're alluding to housing and transportation costs, which are closely linked with where you live and how much you spend. So presumably households downtown.
You're at 30% as a burden, but if somebody lives in an area where they don't need a vehicle to get to work, and so what would the burden be there? Would it be 35% or?
Since it's based off of just housing cost, it would still be that 30%. If we were looking at housing plus transportation costs, that would vary based off of where you live. I'm not aware of a specific metric the way that housing cost burden is defined as that 30% and severely cost burden at 50% of your income being.
And how recent is the information that you're using on rents?
We are using the most recent available data. I will note that the demand is from last year, the demand projections. We are actually engaged by the Tampa Bay Partnership right now to update those projections regionally. So we are doing the same study for Pinellas County, Pasco County, and Hillsborough County.
I follow the market pretty thoroughly, and I can tell you that it's pretty soft right now. Rent rates are coming down. Most of the big projects out there that you see right now are offering 2 months free rent for people to move in. There's a big adjustment coming in rental rates right now, just so you know.
But they do ebb and flow.
They do ebb and flow. Yes, they
Sometimes it
do.
gets super tight.
Right.
And then it drops and it's super soft. And
Yep.
you kind of have to look the forest for the trees
Yeah.
a little bit as we plan. I mean,
Yeah, no, I'll just let you know what I'm seeing, because I pay attention to it, because I have rental properties.
So, question. So a few slides back, you said we need another 47,000 in the next 10 years. And just doing some quick math, in the last 6 years, we've been doing about 450 units a year. But in order to get to that, we've got to be like close to 4,500 a year. over the next decade. So how solid are you in that 47,000 number? Because there's no way, it's impossible.
So let me just pull that slide up here. So with the 47,000 new housing units, the county has been producing 3,345 units annually in the last few years. Or I guess that's what the need is. And the county has been producing 2,700 units. That includes market rate and affordable
Per
units.
year, we've been producing
per year.
2,700 per year.
Yep.
Okay. Maybe I misread the slide. 'Cause I
Yes, so
thought it was-
the 47 is total units, not affordable units needed.
Okay, affordable units.
For the units, for the demand of units for households earning less than 120% AMI is closer to 24,000.
So 24,000. Okay.
The private market will
Yeah, I mean, it's
continue
like
to
there's
deliver
so many
some
numbers
of
you
that
said that-
40, demand for the 47,000 units.
Okay, yeah, all right, we have to digest this some more, because there's a
Yeah,
lot of
so
numbers
it's
here.
like countywide, you're saying market rate and affordable through the end of 2035, 47,000. Through 2019 and 2023, the county's permitting market rate and affordable 2,700
Yep.
units per year.
Yep.
But so we need to get from 2,700 units a year to 3,300 units a year to meet that gap by 2035.
Yes, so increase in overall production is needed, as well as increase in production for for households earning less than 120% AMI, in which the market is unable to bear those costs.
What's, in your calculations here, how much are you projecting the Pinellas population to grow each year, percentage-wise? Any idea?
I don't have the percent off the top of my head. I don't have those
Because at for Pinellas, we typically look at about 2% a year is kind of what we're.
Yeah, so it is based off of the University of Florida's population projections called Bieber. So we are using the same projections that, Fort Pinellas, the county, yeah, we're all using the same.
Okay, okay, that's, I want to make sure. Okay, thank you.
So we're all wrong or we're all right.
Yes, and one note there on the population projections would be that is based off of demand. Pinellas County has limited greenfield land available to support development, so meeting those targets will require increasing density and trying to squeeze in units where you can. All right, with that, I'm going to continue on through the presentation. Thank you for those questions so far. So digging into the different AMI levels of those assisted units, Penny 4 funding targets unmet housing demand. Those rental developments tend to provide deeper affordability than home ownership units. So this chart here breaks out the share of affordable units by income level. Approximately 83% of affordable new construction rental units are approved for households earning less than 80% AMI, including 60% of units earning less than 60% AMI. So this really does demonstrate that Penny and the Affordable Housing Development Program is being used to fill the gaps that the private market would not support production of those units. Additionally, most home ownership units, about 64%, are set aside for households earning less than 120%. Only 3% of those units serve households earning less than 60% AMI. And overall, rental developments, both new construction and rehab, tend to provide deeper affordability than those home ownership projects. One of the benefits of utilizing the
Sorry,
yes.
you said the rental and rehab provides more affordability than home ownership. But what's the average term of those rentals that are subsidized that revert to market rate?
So this slide's going to get to that.
Perfect.
So this slide, we are looking at the affordability periods. So we've broken it out by the source of funds and then also provided a breakdown of affordability period by type, whether new construction, rental, home ownership, or rental rehab. So one of the benefits of Penny is that the county is able to negotiate 4 longer affordability periods. State and federal sources often require 15 or 30-year periods, which you kind of see in the teal or blue on the chart. The program guidelines technically requires 15 years as the affordability period, but it's typically much longer than that, particularly for projects receiving the land acquisition funds that are put into the county's land bank with 99-year leases. So the vast majority of the assisted units have affordability periods of 30 years or more, and 46% of the assisted units are affordable for 99 years. This is beneficial for the county because legally restricted affordable housing is a long-term asset that provides safe, quality living environment for working families and creates a resilient housing stock that can withstand future affordability challenges, unlike some programs like rental assistance, which does not create that new housing infrastructure that the county maintains. This slide provides a few examples of projects that have been supported using penny funds to really demonstrate the flexibility in how the funds can be utilized. So this first one, Skyway Lofts, is a new construction rental project in St. Pete. This was a 9% LIHTC project, and we'll hear about this a bit later. The second one is Long Lake Preserves. This is a new construction home ownership project developed by Habitat and an example of a townhome project that serves households up to 120% AMI. And this last one is the Oasis at Bayside. And this is an example of a rental rehab project in which penny funds were used to acquire rehab, improve the quality of the building, and preserve affordable units for the long term. So additional gap funding is needed as costs continue to increase. As you are all very aware, construction costs in the last few years have increased significantly. This is driven by a variety of reasons: increasing costs of insurance, increased hard construction costs, increasing interest rates, et cetera, et cetera. As construction costs increase, the gap also increased, and the average assistance per unit as a percent of total cost has also ticked up. Overall, the average assistance per unit was $42,800, with rental units typically requiring less assistance per unit than home ownership units. And at the same time, on average, new construction home ownership units cost more than the rental units to construct.
Commissioners, if I can add, what we've really seen since like 2000 when this started, I'm sorry, 2020 since it started, is we have to be like the last funding source in. It has to have other funding sources to make these projects happen. And we've seen these where, you know, Largo's had to come up with money, St. Pete has had to come up with money, because otherwise, doing it alone, we just simply couldn't afford it through our program. So it's really required us to be kind of last dollars in and multiple funding sources for any of these programs because of that, you know, cost increase in the construction.
And there's a slide later in which we're going to break down capital stacks for several projects, and we can talk about how penny fits in. So if there are questions specifically about the capital stacks, I'm going to pause if that's okay.
I'm talking about, I think about the rehab cost is so much better a way to go if we had a place to relocate residents when we're doing it.
Well, and you know, one of the biggest things, and you know, I mean, we've got, you know, our own staff here that can speak more, you know, intelligently about this, but you've got to get people that are interested in participating in affordable housing programs. You know, a lot of developers, because the market was hot, simply they could go market rate. They didn't need to, you know, deal with this. And so that may be changing now, you know, with the change in the real estate market. I don't know the answer to that, but that was really a struggle. We had a couple of developers early on where we had went out and said, you know, I mean, think about if you drove 19, if all of those units had set aside 20% of the units as affordable, what a different landscape that would be. But they didn't. They went market rate. And so we had some developers early on when we started this program for the new penny, and they were interested. And then as the market got hot, they said, thank you, but no thank you, right? And so I think part of this is going to be changing with the market. you know, and that's, they can really speak to that because they're the ones dealing with it and having those detailed conversations.
Yeah, just piggybacking that, I recall we were doing some financial reviews for projects that had anticipated setting aside units for affordable housing and backed away because the market was too strong. They were just better off doing straight market rates. So that is certainly something that we've seen. Digging back into the assistance per unit, not surprisingly, there are economies of scale for larger projects. And the program here, each dot represents a project. So the program has primarily focused on projects that are more cost-effective in terms of assistance per unit. So there, you can see on the left, kind of right by the y-axis there were a number of new construction home ownership projects that were low-density single units that required substantial amount of assistance per unit. But as we increase in the total number of units per project, we see that kind of regulate around that average 50,000. So digging into those capital stacks that I promised you all, this slide is looking at how Penny is leveraged to support a variety of projects. So as was mentioned, it really does come in as that last source of funds. Skyway Lofts is that first project on the left. That was the one that I mentioned earlier. This was a 9% low-income housing tax credit project. As you may be aware, 9% credits are very competitive to get. That's because they provide the most LIHTC equity for a project. Typically 70 to 80% of a project could be funded with LIHTC. Yep, yeah, one or maybe two if they're two smaller projects, but it's typically one project per year. And even then, back a few years ago, you could perhaps produce one of those projects without additional assistance. With increasing costs, additional assistance is required to even get those projects funded. So here in the orange, you see that the Penny 4 funds were used to close the final gap there with about 10,000 in assistance per unit to get 65 assisted units.
Hey, Barry, or Commissioner Laval, go ahead.
Why was the assistance on the Seminole Square project so much higher than the others?
What do you?
Are you talking about the per unit cost?
Yeah.
No, it's 13% versus.
So that goes to that 4 and 9% tax credit.
Yep.
So 4% provides less assistance. And than the 9%, and that's the reason they're so competitive to get.
Yep.
The federal government's only giving out so much of that because that's dollars out the door, and so each one of those is a little different. And that goes to the gap financing needed for it to be able to pencil out.
Yep. Yeah, so that second bar chart there is for Seminole Square, which is a 4% LIHTC project. Typically, 4% LIHTC credits fund about 30 to 40%, so there's that bigger gap that needs to be filled. So 4% deals always require some form of local assistance or other assistance. So Pinellas County has the Affordable Housing Development Program and funds that can slip in to help close that gap. Unlike the 9% credits, 4% credits are not competitive. So there's no limit in the number of projects that could be produced each year. So using Penny to leverage those federal funds with the 4% credits is an effective way to utilize the funds.
So
And then,
quick question. Yeah, I don't know if this is a Barry or a Caitlin question or staff, but so when the municipalities pitch in, where do their funds come from? Are they using their Penny funds, or are they SHIP funds, or do we know where they're coming from?
Typically, like St. Petersburg is our affordable housing funds, and Bruce, you could speak to this more specifically. But I'll let Bruce speak to it but that's typically where I've seen it. Largo has affordable housing funds, and so does St. Pete. Those are two of probably the biggest that do that.
Yeah, I think Barry's absolutely correct. It's pretty much the larger cities that get entitlement funding. Largo, St. Pete, Clearwater have basically a similar program as we do. St. Pete has set aside Penny funds specifically for affordable housing development. They also have what their staff typically calls discretionary funds that they've budgeted for affordable housing. So St. Pete by far has the most resources of any other jurisdictions. Clearwater and Largo receive federal and state entitlement funds. Other ways they'll provide some assistances through some waivers, density bonus, other kinds of things to promote affordable housing, but typically they're the same types of resources. That's why it's one of the reasons it's a little more challenging to do a project in Dunedin, for example, or Safety Harbor, because those cities do not receive other allocations of funding. So if, you'll see a lot of these projects were in St. Petersburg for a variety of reasons, one being the financial resources that the city has. And
Right, okay, makes sense. Thank you. Any other questions?
Yes, thanks, Chair. Just a quick question on the different programs. You know, we have Florida Housing Authority, Pinellas County Housing Authority, then we have all the various city programs. Is the penny at times in competition with these other programs to find projects that, I mean, are we competing with each other?
I will defer to Bruce, but my initial response is that they complement each other.
I think they require multiple funding sources to be able to make the projects happen. But Bruce and them negotiate hard on these. What comes into them initially is not what, and what the ask is not usually what comes out and comes before you. They look at making sure that we're doing the minimum necessary to be able to make the project pencil, making developers, forego developer fees and things like that to make it a competitive process. But it absolutely is required multiple funding sources.
Is that typical? They have multiple, or is this just?
I think
the
each project's
cases
probably a
where
little
we-
different depending upon where they're at.
Right.
yeah, like this slide indicates, there's typically a significant stack of different funding sources. For example, the HFA, they issue tax-exempt bonds, and a lot of those projects that come to the board, they'll have at least this many different layers of capital and funding. And Caitlin's kind of making the point here about 4% tax credit deals are non-competitive, but because they require so much assistance that if local governments do not have these resources, they just don't move forward, and so those deals just do not happen. And so I think that's one of the advantages that the Penny program has brought to Pinellas County. We get calls from a lot of other counties and cities around the state asking, how does your program work? Why are you guys doing so many more 4% projects than others? So as Caitlin, I think the programs complement each other much more so than really compete. Now, each grant program, home, for example, those dollars can only be spent in certain areas, so the flexibility of the Penny program makes it a go-to source that might make it a little more challenging for us to spend our home dollars, but we wouldn't be spending those home dollars on the projects we are spending Penny funds on in St. Pete, working with developers who have already kind of got the wheels turning. The federal requirements are a lot more restrictive, so I think they're complementing each other and increasing the productivity.
Okay, thank you.
And building on that flexibility, I think the Azalea Gateway project here is a great example of that flexibility in which that is a market rate mixed income project, and the county was able to negotiate to have some set asides for households earning 80% and 120% AMI with just $15,000 in assistance per unit. And then just as a side note, thinking about capital stack's need for additional assistance, I mentioned that SB Friedman is working on a study with the Tampa Bay Partnership. Part of that study, we are working with another consultant team who is looking at all of the projects requesting financing in the pipeline and estimating what that gap is in terms of financial need. So I think that will be a study that will be of interest to you all once it's complete in the next few months. Any other questions about the capital stacks? We're about to kind of get into big picture conclusions. All right, so bringing it home. Overall, we found that the Penny 4 funding and the Affordable Housing Development Program has dramatically increased affordable housing production across the county. It may feel like a drop in the bucket, but it takes a lot of different tools, a lot of different funding sources to make affordable housing a reality. There is going to be a continued need to invest in housing affordability as affordability is declining throughout the county. Housing costs have risen faster than household incomes, which has created financial strain, and there's significant demand through 2035 for multifamily rental housing, particularly for households earning less than 120% AMI. And sustained investment is essential to meet the growing demand and continue to support the economy of Pinellas County. Talked a bit earlier about how affordable housing is critical to support those essential jobs as well as support target industry job attraction and retention. Looking at the numbers, we found that the affordable housing program is delivering results that are cost-effective, that are targeted and impactful. Every $1 of program investment supports additional $9 of investment and has supported over $1 billion in affordable housing investment in the county. And the program itself is serving a substantial portion of the population in need, with 84% of units set aside for households earning less than 80% of those 55% units set aside for households earning 60% AMI or lower. Overall, we found that the program is an effective tool for addressing affordable housing demand, and the county has successfully approved projects that help meet that growing demand. 83% of funding was the penny for funds, which again, I mentioned this earlier, indicates just the importance of that as a source of funds to help close the gap. And as we also discussed, penny for funding leverages and complements other funding sources and provides that additional bit of flexibility. We also looked at some key takeaways by project type. There's a lot here, so I'll try to go quickly. Thinking about new construction rental, we found that the program supports a variety of project types, from fully affordable to mixed income with projects with affordable units in market rate buildings. Over 60% of units serve households earning 60% AMI or less when it's the new construction rental. So again, going back to meeting that overall demand. On average, new construction rental projects require less funding assistance per unit, which is a cost-effective way to add additional units. And projects are typically denser, which maximize the affordable units for a given land area. And these projects generally maintain affordability for 30 years or longer. For new construction home ownership, the number of projects that have been completed is fairly limited by a variety of considerations. First, countywide housing market conditions. There's a lack of developer incentives to support home ownership, new construction. There's high costs of development, and going back to the lack of incentives, projects are not LIHTC eligible. So LIHTC is the largest funding source for affordable projects, and that's not available to support home ownership. Projects here also generally maintain affordability for less than the rental projects with 20 years or less. And then the rental rehab. This preserves affordability of those existing naturally occurring affordable units that would otherwise be subject to rent increases. It subsidizes units to either maintain quality or could be used to incentivize longer affordability periods. And the total cost per unit is typically lower. Here we found that most projects maintain affordability for that 99-year period. Forward-looking, we do have some recommendations, and we're excited to talk with you about this morning. For new construction rental, we think prioritizing the multifamily rental housing to continue to do this to meet the greatest need and growing demand. Target, of course, households earning less than 80% AMI, where the market is less able to support those units. Continue to leverage other sources, particularly that 4% LIHTC projects, which we talked about in detail. Continue to maximize allowable density, and of course, negotiate long-term affordability periods. Thinking about home ownership, as I mentioned, the private market is not providing affordable home ownership units that are subsidized. So it'll be continue working with those nonprofit partners. Habitat for Humanity is one that comes to mind, to build those workforce units for households earning up to 120% AMI and increase Also prioritizing denser townhome development, which is more cost-effective in terms of assistance per unit. And then also use other funding sources to provide other forms of assistance to support home ownership. So other programs that the county has include down payment assistance, home repair programs, which helps households earning less than the 80% AMI. And then finally, rental rehab, continue to support the acquisition and renovation of large projects that target households earning up to 80% AMI or less, focusing particularly on projects that have building quality issues or are in locations with rapidly increasing housing costs in order to preserve affordability in those neighborhoods. And then maintaining a list of properties with income restrictions, designing an outreach program to understand recapitalization needs. Big picture, we think the program has been successful in adding additional units, but we think that we could continue to analyze the effectiveness of the various tools and how they work together. I mentioned earlier that funding alone is not going to solve the affordable housing project or problems or challenges in the county. It is, we'll need comprehensive solutions that work together. So we'll hear a bit more about some of the regulatory side of things in the next presentation. And another thing we thought would be important would be to collaborate with Forward Pinellas to expand the affordable housing dashboard, which identifies Live Local Act units coming on board, but expanding that to think about how can we be transparent about the number of affordable units, occupancy, households served, and just tracking what is happening in the county to hold partners, yourselves accountable for meeting that overall target for housing demand in the next 10 years, 2035. And with that, that is the final slide. I am happy to flip back to other slides. I'm happy to answer additional questions and just facilitate a discussion. Or we can go to Alan and then have a bigger discussion after.
Commissioner Nowicki, and then we'll go to Commissioner Eggers.
Go ahead. Thank you. Just in the first key takeaways slide, you said there's a significant projected demand through 2035 for multifamily rental housing, particularly households earning 120% AMI. Where's that data from, I guess? What?
That is the 47,000 total units, 31,000 multifamily, and overall 50% of housing is needed for households earning less than 120% AMI. That is based off of, so that statement is trying to summarize that slide in one sentence.
But there was no like survey done, like of someone saying, oh, I earn 100% of AMI, I'd rather live in a 500 square foot apartment with no parking space versus owning a house.
So the demand projections are based off of the population increases, demographics, including age and income, and household preferences. So it does take into account that young families may want to live in smaller households, aging seniors may want to downsize. So it does take that into account. It's based off of historical trends as well as national and regional trends data that we have in recent years and projections going forward.
Yeah, because I mean, personally, I don't think anybody would rather live in a, I could be wrong, but 600 square foot apartment, or I think City of St. Pete, reduce the size of a square foot of apartment to eliminate parking spaces. So I mean, I don't, think a lot of people necessarily want to live there. I think the American dream is to own a house, yeah, I was a little, I appreciate the presentation and everything. I guess, I thought like the point of this, from my understanding from Barry, was that it was going to be like, have a focus on like home ownership. And to me, it's not really kind of been presented that way.
Well, I think you can ask her opinion on that. Because one of the questions Commissioner Nowicki's bringing up is, we focus a lot on the need for affordable housing and rental units. And is that because people don't have a choice but for a rental unit? Because we talked a lot before with the commission, and Commissioner Nowicki brought it up, is shouldn't our focus be on home ownership to create equity and wealth for individuals rather than on rental, but yet you say the demand is in that rental market. Now, so if you can kind of help us with, your response to that. We were really trying to outline the overall program, because one of the other questions that the commission raised is, we're producing so many units at some cost, is it worth it? Is it throwing a pebble into the Gulf and hoping for a wave? And that was one of the questions. So we were trying to give some background, but we can do additional research, gather information. Wherever you want to go with this, we'd be happy to do more work on this. But maybe you can answer that question, because that goes to your point.
Yeah, so thinking about home ownership, this presentation is focused primarily on the effectiveness of the Affordable Housing Development Program. There are not many developers producing units that are affordable home ownership units. Habitat is the primary nonprofit agency in the community that is doing that. From my understanding, the county has been happy to support those projects and fill in kind of the last source of funds as needed to continue to support those, but it is just not something that is being produced. It is difficult to incentivize market rate for sale housing developers to produce units that are affordable, especially given the increasing housing costs and the amount of assistance that would be needed to make that worthwhile for private market rate developers. With the housing market the way it is, new construction homes are being sold for $1 million plus, $800,000, $600,000. It's very hard to subsidize those and make it worthwhile. So the county and staff have done a great job of prioritizing the home ownership projects that come forward by Habitat primarily, and kind of supporting as needed. But the market just isn't doing that. That's not to say the county is not supporting home ownership generally. There are other programs and sources of funds. The down payment assistance program and home repair are two programs that I mentioned earlier. Those have different sources of funds from the state that help support that. There are other tools available. This presentation was focused on the penny, but there are other programs that are effectively supporting home ownership goals. Does that sort of get?
Yeah. Well, first of all, appreciate the presentation. I was trying on this morning to try to follow all the percentages and numbers, and still not sure I've got it all. Because I was kind of like Commissioner Scott was saying, that we've reached 2,700 units that we've done, and then I heard it was a per year number, and so that's a big difference, obviously. So it'd be nice to understand that little number and make sure that I understand that. Just a few thoughts. You mentioned the ownership, and I think ownership versus rental. I've kind of grown up with everybody would prefer to own than rent, but I don't know that that's true, and I don't know if there's stats out there that actually show that folks today, whether it's at 60% AMI or 150% AMI, prefer to rent or own. I don't know. I mean, the younger folks, they have different senses of that than folks like Commissioner Latvala, who's a little bit older than the younger folks, or like me, who's even older than. So we all have different demographic. Our demographics have different preferences. So I'd like to get a sense of that. But the other piece that always strikes me when we have these conversations is that we talk about AMI and percentages. And it'd be nice to sort of walk through an example of what that is and how that translates to the kind of job. You did a little bit of generality on that as well. And how our economic development department can plug in and address what I consider, it's a term I've heard called underemployed people. So we have a couple of programs where folks either have a job or they're sitting at home and they have a chance to come in and learn about opportunities, about training, and then about interviewing for jobs, about getting jobs with really good companies and elevating their AMI. And I don't know that, again, are we doing enough to connect? It'd be nice to go through that, because at some point, I'd love to slide people up the scale or to do what we can do to encourage people to slide up the scale. It's not what we're paying, it's what the market's going to pay them. But I don't know that we're doing enough to connect that, and so it helps people kind of move along. And, you know, again, just understanding specifics about what we're trying to get done would be helpful. The only other piece I'd just bring up at this point is the policing effort of it. When I say policing effort, like the rentals that we're charging as we go through 3 years, 6 years, 9 years, 12 years, are the owners of those projects, developments, still doing what we're supposed to be doing on the rentals, and who's following that and who's monitoring that.
I can chime in that it is annually tracked. Bruce's team does look.
Bruce,
Say that again, please.
Bruce can speak to this in more detail, but each year it is verified, the annual income of the folks living in each unit. So I'll let Bruce speak to the details of that.
Yeah, the affordability requirements are put in place with land use restrictions and also agreements with the developer. And so part of those agreements require, in most cases, the owner of the apartment complex to hire a third-party monitor that comes in on an annual basis and monitors the income qualifications of the tenants and the rent rolls to make sure that they're in compliance. So they are obligated to do that. It's an entity that they get county's approval to do that, submit those reports to the county, and then our staff reviews that, addresses any issues outstanding.
So if I'm renting there every year, they check in to see what my salary is now, to see if they're going to, like, for instance, I get in at a $35,000 salary, but I've taken advantage of this underemployment thing that's gotten us up to $65,000. Do they do an income check every year to see if they still qualify for the reduced rate? Or how does that technically work?
Yes, they do the annual income updates. And so if someone gets to the point where they've exceeded that limit, there are sort of a couple of options. One option would be what we kind of call floating units. So if you've got a 100-unit complex and 20 of those units have to be restricted for affordable households, then that household that is now over income could possibly stay in that unit if your next vacancy is rented to an income qualified household, so that at all times you're meeting the minimum requirements to have enough units available per the restrictions. Otherwise, then once that lease was terminated, they would need to move out if there aren't any other options. So it is tracked on an annual basis. You mentioned the sliding scale, and as we talk about homeownership and rental housing, that's one of the big benefits of providing rental housing at affordable rates, because it gives those households the opportunity to save up some dollars to lower their housing costs so maybe they can save up for that down payment to buy that first house. And so there is kind of I know you were specifically talking about the economic job growth and incomes, but that also kind of applies to the housing ladder, if you will, of renting that first apartment that, you might be co-housing with some people and getting by, but then at later times if you can afford to rent a unit that's more affordable and save some money for that down payment to get that first home, get into ownership that way. So that's where we see programs like down payment assistance really helping out in the ownership, because those people are buying not a brand new home, they're buying existing, maybe a condominium or a townhome.
I understand. When they do that annual check, it's not like I don't want to disincentivize somebody from getting a better job, but also pricing themselves out of where they are. So before they're ready to take that next step or find a newer unit that's a little bit nicer for them, or I don't know, however they describe it. I don't want to presume any of that, but I'm just saying, to me, there needs to be a lag period. I mean, if you find out that you now no longer qualify, you have to move out immediately, or do you have a year left on, then you get a new year, but at the end of that year, you may have to move, or how does?
Would certainly stay during the time period of your lease. And that's one of the reasons that we often try to get different levels of affordability. Sort of our perfect project would not be necessarily 100% under 60% AMI. We'd have some 60% units, 80% units, and 120% units, and some units that are market rate. That allows a lot more flexibility so that, they always have to be in compliance with those requirements, but that gives a lot of more flexibility so that people aren't having to move out because of increases in.
I mean, I know Barry and his group, there's a group of folks that are working on this very thing, talking about income levels and how do we get the word out that there are companies looking to fill jobs that haven't been filled, and there are folks that they're willing to get to train up. And some of these programs like AmSkills or whatever has an opportunity to take folks and train them up and then get trained further. So I don't want folks to be disincentivized with those opportunities to, because they found a place to live and they've got a family there and, it's just disruptive, and so they don't pursue those other opportunities. I think it all kind of ties together, and we're not to presume too much on anybody, but if we can encourage and work folks up that AMI scale, I think that's what we're all looking for. I know this area trails a little bit on metro areas in the state. The USF came up with that study. They do that annual study that looks at it. We're trailing a little bit, but I know things are kind of rising up here a little, and I just want to make sure that we're incentivizing, encouraging, at the same time providing, the facility, so.
A lot of times that's why we're talking about 120% AMI, because that does give opportunities for that growth, a mix of different income levels. And we were at a ribbon cutting just last week in St. Petersburg for a new project by UCourt that the county and the city funded. And that has those 3 different tiers, as well as some unrestricted units right near downtown St. Petersburg. And so there's a couple of school teachers that have already moved into that area, a couple of city employees. So it's giving some of that flexibility for multiple income ranges as.
All right, thank you.
I got just some question and a quick comment. So if you're, to Commissioner Egger's point there, so if I'm 60% AMI and I'm in a rental unit and my income moves up, so maybe now I'm 80%, so I may very well just stay in that same unit, but my rent might go up at my lease. So it may go up $100 a month or whatever the number is. Okay.
Yeah, you're exactly right. The rent limits are based on those income categories. So they're essentially set at 30% of that income level. So if you're at 77% AMI, you're basically paying that 80% rent limit.
Right, okay. And on the home ownership piece, I thought it was interesting that kind of recently Habitat did a multifamily ownership unit. So I just kind of wonder if we may start to see more of that, because there is so little green space out there to build new homes. And basically, for the most part, what Habitat's doing in a lot of places is they're kind of rehabbing. They're knocking down and building new. So I just kind of wonder if we may start to see more of those multifamily ownership units coming through Habitat. And just to make sure I understand the number right, so we're currently producing or authorizing 2,700 units a year, and we need to meet the 2035 goal, assuming market conditions stay what we predict them to be, we need to bump that up to 3,300 a year, and roughly 50% of those need to be affordable?
Yes, yeah, it'd be 3,300 annually. Moving, sorry, let me go to the mic. Yes, so I have it here. Yeah, to meet the projected demand, you need to increase annual production to about 3,300 units per year, and that would meet the new demand, of which 50% would need to be affordable to households earning less than 120% AMI.
And we've already used how much of our penny funds for that, for this penny? 83%? So it's going to be, yeah, so it's going to be challenging. All right, thank you. Commissioner Sherrod, do you have a comment?
I don't have any questions, but, so I don't want to hold them up, but I did want to talk about some ideas I had to encourage affordable housing in general that wouldn't use the penny.
All right, do we have any other questions for Caitlin?
No, I just have questions for, and I don't know if you guys have the answer to that, but how many people are actually using the assistance, that program that we give them? So either the down payment assistant or repairing their home, so that they can stay in their home. I mean, is that highly used? Is there a lot of money allocated to it? How many homes are getting fixed so they can stay in their home? How many people are getting that down payment, first-time buyer assistance? Are we getting good traction with that?
The current status, following the 2 hurricanes, we stopped both of those programs to reallocate those resources to hurricane home repair. And so it's very similar to our typical home repair program, but we're focusing now just on hurricane, income-eligible hurricane repair. Prior to that, we were spending approximately $5 to $6 million a year on down payment assistance. The down payment assistance program caps out at $75,000 based on income. And so we really had some pretty good momentum going. It's been challenging, but we were spending those dollars pre-hurricane on down payment assistance and the home repair program. In terms of number of households, it's about 50 to 70 households a year buying new homes, and then 30 to 50 homes on the repair program. So it's not, huge numbers, but it's a pretty effective program in the sense that a lot of those dollars are used as loans. And so when people either move out or sell their homes, those dollars come back and recycle the funds that way as well. There's also other down payment assistance programs. The Housing Finance Authority provides first-time homebuyer down payment assistance. Some of the cities have homebuyer programs. Even some lenders are also providing some home buying assistance. So kind of a different realm than the development, but certainly a very key aspect for affordable housing.
Do we know that if we, and not counting on hurricane, because I understand you suspended that to do something different, but of the people that got the first time buying up to $75,000, did they buy that? Are they still in their house? Are we doing any follow-up? If they use their money for repair so that they could stay in their home, did they stay in their home? Do we have any of that kind of?
Yeah, that's kind of easy to track in the sense that when we provide the down payment assistance, that's a mortgage loan. So if they sell their unit, then we get the proceeds back. And so we receive that as program income. So we track it that way. And we also track on an annual basis. We send out a letter to everybody that's received that assistance to have them verify that they're still there and also provide their homeowners insurance. So I don't have the data with me in terms of how long they stay in those units. Some are 3 or 4 years, but basically each week I see loan satisfaction documents for people that are either moving out or have reached the end of their 20-year, 30-year mortgage term. So we could come back with some data on that. If you
Okay, and I'm just curious about the people that are borrowing money to fix their home, if they're staying as well.
in terms
Because I don't know that I would love that they're borrowing money to fix their home and then they turn around and sell it.
Right.
And we put some of those same safeguards in place with our rehab program. For example, if we provide a $50,000 loan to a household that's under 50% AMI, we'll call it a grant, but we basically put a mortgage on there that for 20 years is a silent mortgage and there's no payments required. But if they sell in a year, they sell in 3 years, then that becomes due and payable. And so we get those proceeds back. So we typically protect all those dollars with our standard programs.
Okay, thanks, Bruce.
Any other questions for Caitlin? All right, Caitlin, thank you very much. Very good presentation.
Thank you all.
As you can see also, Commissioners, this is really important for the housing compact, which is all the municipalities and the county that come together, because just navigating this, the questions you asked, whether you have to go to the municipality or the county, I mean, it's confusing. There's a lot of different programs out there and they work together, but having the housing compact where people can go to one place to see what types of options and programs are available, I think that's an area where we can do a much better job and continue to try to advance that.
Right. Barry, just for my own clarification here, I want to make sure I got this right. So have we already used 83% of approved penny funds for affordable housing for this decade? So we only have 17%?
They're either spent or committed, yes.
So we only have 17% left?
Yep. You said to get this program up and going, so we did.
Yeah.
And just so you know, when I went to FAST the other night, they were very happy with you, that you had been spending this kind of money, but don't slow down. And I said, well, we only have like 17 or 18%, so we're not
Yeah.
going to be able to keep it up. the same
Yeah, right.
pace,
At
so-
some point, we're going to fall off a cliff there.
Yeah, well, I mean, again, you've got a lot in the pipeline, and I'm sure some of that will change, just with whether projects actually get delivered on or not, but they've been doing a great job, of really trying to push these programs and, so.
All right, so now we'll move on to the housing initiatives update, and then Commissioner Share, if we could, why don't we go through this, because maybe this will bring up some of your points, and then we can talk about what you want to discuss there. That's okay, all right? Okay.
Thank
All
you,
right,
Mr.
good morning.
Chair. Good morning, Alan Steinbeck, and we're really going to shift gears from talking about money to talking about policy. So as Caitlin talked about the success of your penny program and other related stuff, this is really about county policy and other policies of other local governments to incentivize housing in ways that try to limit the number of public checks that get written in the process and make affordable housing a more natural part of private development. I do agree with one of Caitlin's very important points, though, that she made, and I don't want it to be lost, and that there is no market forces that drive people to develop housing under a certain level of AMI. And I think you said the number's my number's 110 or so, but it's basically middle income and below. There's actually no signals telling developers to build housing for those folks, not new housing, because of the cost of development and that cost of development and income gap that's widening. That was that one chart that was early on in Caitlin's slide. So to get affordable housing in private development and to get it to be a function of private development is a key goal in order to limit the amount of public funding that goes and to supplement the programmatic outcome of affordable housing in the natural marketplace providing. That requires regulations and rules and monitoring, just like when you spend your money doing it. It also requires a good level of incentives that are appropriately calibrated to the cost so that you can get above the incentive line for developers to build. Yes.
Cost of goods sold that's been subject to the inflationary pressures, one item that developers look at. And then the cost of land. We have a limited amount of available land here. That's another piece that developers look at. Have they both been challenging for developers, one more than the other? And I guess at the end of the day, are we developing initiatives for one or the other or both? Just a general comment on what your thoughts are on that cost of goods sold versus, and the inflationary pressures versus the land cost increasing.
The cost of goods sold has been a particularly problematic thing in the past 5 years, especially COVID era and beyond. I don't foresee that changing. It's going to probably get worse before it gets better. The land costs have been a lesser problem, but in places like Pinellas County, we know there's a land shortage for just about everything, right? And it's all a lot of redevelopment assumptions, which is hard to do. So going out into the future, it just gets harder and harder because of the land cost and land supply issues.
The movement towards multifamily might have a positive influence in terms of if we did some encouraging things with limited land to do more of that and encourage that. I don't know.
It's where you can get the numbers.
Yeah.
Yes. So there are other ways to do it, and maybe after I'm done, there could be some discussion of the different ways. But I wanted to cover this. There are two things that are being talked about in this presentation. One is a partnership between Pinellas County and Ford Pinellas, and Becca Stonefield and Linda Fisher are here, who are the brain trust at the county level and at Ford Pinellas, who helped us through this process. We have now created a final draft of a housing regulatory toolkit, which purpose is to help have a standard set of guidance for how to develop housing policy and incentives throughout Pinellas County, with the goal of having jurisdictions use this as a resource and building off some of the work that you all have done in the second project, which is in this presentation, and is an update about Pinellas County's own housing regulations that apply to unincorporated county. So there's two things happening here, so hope we don't get lost in that, but I just wanted to remind you of that. The first thing I'm going to talk about is this regulatory toolkit meant to provide guidance for other jurisdictions in the county. We're trying to increase choices of housing, enhance collaboration, and provide incentives that are efficient and effective. You all work with other jurisdictions and layer your money in with other folks, and so there's already collaborations going on, financial ones. So we're trying to get the policies to work together so that everybody has a good sense of what's going on, and it's easier to get things done that way. In the process of creating these guidelines, we did an audit of all of the jurisdictions' policies in the whole county, And this is just to show you the number of incentives that were on the books. In orange, you see what's in the comprehensive plans, and in blue, you see what's in the land development codes of each of these jurisdictions. And the hard-coded land development code provisions are the ones that we really like to see because those have the most teeth where the rubber meets the road in development decisions. And Pinellas County is sort of leading the way as a result of what's on the books now, and we've only enhanced that through the recent work that we've done. We had direct coordination in developing this toolkit. This is a picture of one of our coordination meetings we had across the county where planning staff and housing staff got together to talk about programmatic issues and also land development review and development issues that were happening. A very important conversation because we have had a great chance to do that across those groups here in Pinellas County, but a lot of local governments don't spend a lot of time doing this. So this was a great opportunity for people to talk to each other. We discussed how the comp plans and the codes work and how interagency coordination works. One of the big pieces of this is the density bonus provision. One of the key underlying factors for us here in Florida is we have statutes that make it impossible for you to require a percentage of affordable units in a development. Other states don't have this. Local governments can just say, every developer shall provide 10% affordable units by fiat, and that is how it is. Can't do that here. If a county or jurisdiction asks someone for something, a public good, then that developer has to be made whole through incentives or other things that can be monetized and quantified. So we're in that space, and because we also have regulations that require us not to downplan and take away density when density has been provided. So the density bonus is an alternative, not required thing that people can participate in. So it's not a development right that's been given away, it's an option. So it's not punitive or required, but it's an attempt to incentivize private development to layer in affordable units. The way it works is if you have a typical project under your land use that you allocate in your land use regs, you may have a maximum allowable density of 6 units per acre. To get affordable units put into that private development, there's a giveaway of additional density. Usually doubling is the magic number to make this work. And then something to set aside in that unit. And in this case, it's simple math. You go from 6 to 12 units after you make the commitment to set aside, and you probably get 1 unit, maybe 2 in that development. So we're looking at around 10% is the number you should probably carry around in your mind if we're gonna layer in those things. For a purely private, that's the magic math that we've discovered. Yes.
Yeah, on that front, because of the live local things that have come down from the state lately about using our industrial lands for housing, which is something that we're all, I won't say we're all equally concerned, but we're all concerned a little bit about. Can we direct these kind of future land use benefits towards areas that aren't industrial and not towards areas that are industrial? Is that a legal thing, or can we try to combat that little? I mean, I personally would like to keep our industrial land for jobs and employment and that kind of thing, but apparently we're being told that you might have to put housing on there. Can we do this in some areas of our land use? Can we make those changes and then not do them in the industrial area? Does that make any sense, or am I just like?
It does, but I got to tell you, I haven't cracked that nut, having thought about it several times now.
Okay.
So what the benefit of this relative to what you're saying is that you have an incentive program that's attractive. So that person who wants to build housing in your community, if they're just a generic housing developer, I want to build something in Pinellas County. They have this to do that allows them to build it under the zoning category where it's appropriate.
I guess so. Maybe you can do that.
You're limiting the demand for the live local side of the equation by providing a space here that's
In certain areas.
in certain areas.
We don't have to provide that incentive in every area.
You don't, and it is an incentive, so it's not subject to all of the
I get it.
density rules that exist in the state.
It makes sense that we can, do our own little, whatever we would like to do.
When I figure out how to work around live local, I'll call you all up, and
Well,
we'll let you all.
Work hard.
Yes,
And one quick question. You said, I didn't follow something you said. I apologize. you said the magic numbers to double,
Yes.
and then you get 10%, I think I heard. What's 10%? I'm sorry.
10% of the resulting units would be designated affordable units within that development, and would be treated much like Bruce was just talking about, monitored units, like you have to keep that number of units in your project for a long continuum and manage them accordingly.
So then we would, like, in this scenario, increase 6 to 12, and then get 1.2 units as a.
What you get back is yes, that's correct. That's correct.
Oh,
And that's without cutting a check, any public check, right? And so the theory is the additional value of those units and the additional rents goes to write down the cost of that one unit. Now, that works really well when you have a jurisdiction that has their future land use densities kind of tied low to the ground. It doesn't work very well when you've already given all that away, because then what's the point of making it 400 units to the acre? Like, at some point, it stops making sense. But there's a real sweet spot in the community, in many communities with their land use to where this is actually functions very well. It's a lot of density. No public money changing hands so far, though. That's the trade-off. That's the trade-off.
So that's the difference. There's in that scenario, there's no penny funds, there's no public money in it.
It could always be a combination of density and subsidy,
Right, okay,
right?
got it, okay.
We created a financial model that we've done now for the city of Tampa to support them in a very similar policy regime. We're creating one for the city of Charleston now to help negotiate these things, because it may be the case that it is the case that sometimes you can get more and sometimes you can't. So there may be some hybrid deals that need to be negotiated through careful modeling of the financials of this. But we feel like the numbers that you have in your recommendations for your community here in this toolkit, but also the ones in the Pinellas regulations, have been calibrated to the Pinellas market. So they are above the indifference point, but they are not giving away too much. And that is the art of this deal, if you will, to make that work. In addition to the density bonuses, that's the foundation of this. There are other incentives that are built into the toolkit, which include expedited review, which is the top level thing that developers need. That certain, how can I get to yes, and the time frame needs to be specific. But other things that help with siting buildings and a little bit of relief on some of the dimensional criteria that will help. But I think that bonus carries almost all of the water, with parking reductions maybe being second. Obviously, if you give someone land, that helps a whole lot as well. So just one last thing to your concern, Commissioner. If, let's say you have some land or some other incentive you want to layer in, then you can start asking for more. Like, yes, we gave you a density bonus, but we're also giving you these other things. So we don't want just 10%, we want 20%. And it gives you an entry into coming up with something where that developer's made whole in the process, because we have to by state statute, but you're negotiating eyes wide open about how much public benefit you're giving away and how much you're getting back. It is knowable in those negotiations. So it also operates in a sliding scale system, and these can be mixed and matched to just like in a typical LIHTC deal that's monitored. These units can be layered into projects with different levels of affordability to allow people to progress through their income levels. And so there's flexibility in how these are used, but there are minimum unit requirement percentages. So if you're going to do 20% of AMI units, you must do at least 20% of your units in order to qualify for any of these incentives. So this is the gateway into the program. The 80 to 60%, the 80 and under class of people is not as heavily served by the legacy public federal programs, which focuses on largely people 60% or less, although some of it can be flexed to 80%. But there's a real hole in the marketplace, if you will, to provide that 60 to 80. And this is where this kind of incentive and these policy incentives can really go to work, is in that space for those people and the 80 to 120 group who have almost no legacy public funding to support their housing needs. So if the old model was a lot of money was spent on the very, very low income and less, this really spends more and more on the middle income and less on the lower income, and fills the gap across those income levels. Very important concept to think about as we talk about private sector AHDs. So this toolkit is moving towards finalization. We're in the throes of it now. Linda is moving it through the committee process. We have one wave of comments it's going through, and in June it will go to the Ford Pinellas Board for acceptance and adoption. Moving on now to the county zone project, which I have also worked on with county staff. We have a major update. The county is really leading the way in establishing these types of regulations for the county and setting the standard. We have new code sections that enable some of the affordable housing development incentives that are already on the books. You already have affordable housing development incentives. They're a little nebulous as previously written about how they're employed, and they're sort of below that indifference line also. So we tried to, in this update, make it clear how they're going to be used, guidance on the procedural elements, as well as that calibrated sliding scale density that's really going to make them go to work. And again, how the bonus works, just to sort of hammer this. It took us a while to get this concept established in the city of Tampa among everyone, but it's not really that complicated. If your underlying land use is 30 in that first box there, you get a 100% density bonus, then you're allowed to do 60 units per acre, and you have some calculated obligation to provide a percentage of units affordable as a result of that. These other incentives, just to give you some sense of the scale of them with a little more detail, we have up to a 10% reduction for affordable housing and an additional 5% for senior and students. So we're not talking about massive parking reductions that have some strong intentionality to them. It's a way to save money on the project and make sure that people aren't spending too much money on parking. There's also lot size and setback reductions that are possible as well. And we work very closely with your county's review staff, and I must say that they were a great collaborator in helping us sort through a lot of these issues and talk about the ins and outs of this. Excuse me. So we have now, in the Pinellas work, completed just about everything. We're finalizing some amendment reviews. There's a few lingering things internally that are being addressed, but we're ready now to move these code amendments through the process and get to you all for adoption and consideration, with preparing to move forward as fast as we can after this meeting to get those done so that you all, Pinellas County, can have rules that effectively meet the needs of your unincorporated area. That is it. And I'll be glad to take any questions about whatever you all are interested in this morning.
Questions? No? No, I just appreciate the efforts because, you know, the key to affordable housing is supply. So whatever you can do to increase supply, I think is a great idea. So.
All right. Thank you very much. Appreciate it. Okay. Commissioner Scheer, did you have some things you wanted to talk about relative to affordable housing?
Yes, on affordable housing, I did. I just, when I first got here, you know, I wanted to learn, but I've always been pretty adamant that I do not like the idea of using penny dollars to subsidize affordable housing, to pay down the cost of the housing or to provide the down payment and the downstroke for the developers, however you want to look at it. We're just, cash is very hard to come by, especially in the developer world. We call it a four-letter word sometimes. And so I don't like to see us using our cash for that. And I would like to see us rely, to provide more affordable housing, rely more on our tax credit programs that we could develop. And I have a whole list of reasons, but the top 10 would be, you know, if we could put together a good tax credit program, it would provide flexibility on the unit mix of affordable housing we're going for, and we could do it on a yearly basis. You can't do that with the penny. If we do with the penny, we're set for 10 years on what we want to do. And we could turn this program on and off for different levels. If we don't have enough 120%, we could provide tax credits for 120% at different levels. Or if we want more 60, we could provide more tax credit. And like I said, it wouldn't require public cash to do that if we had tax credits for affordable houses. And they would not be constrained by the penny funds. You know, the penny, we're running out. but tax credits wouldn't run out. We could authorize
You're
more.
talking property ad valorem tax
Yeah,
credits?
property tax, yeah. We could be providing discounts on affordable housing units rather than cash. Cash is hard to come by, like I said, but providing discounts to, on a 60% or an 80%, you know, it would be less for 80 than it would be 60, but we could work on those adjustments. It would provide flexibility to housing developers and current owners. Like, there might be people out there that own affordable housing, but they don't have an opportunity. If we had a tax credit program, they could say, hey, I'll take 20 of my units and make them affordable. Give me a little break on my taxes, and then I'll make the house, you know, the property taxes. But for new developers, too, they could say, and that they could, you know, put their levels in there, and we give them a tax credit for each unit, and it won't cost us money, which is big. That would also, for new developers, it would increase our tax base, it would increase our tax revenues. And that if we put the right program together for the developers, and we had a tax credit system, they could sell tax credits to raise equity to build the new developments. So that would, there's a federal program for tax credits for affordable housing. We could do that. And it would also, Commissioner Eggers, your point about people being forced to move out if they make too much money, well, I don't know, if we put the program together correctly, if they made more money and they were no longer qualified, the owner could just say, okay, well, I'm just going to go to the 80%. I'm going from 60 to 80 on my tax credit. So they wouldn't even have to move. They could just, the credit would be less. So I would really like to explore using tax credits because there's so many benefits to it than the constraints of a penny tax. You know, I'd rather use penny money for infrastructure and bridges and parks than I would trying to provide housing because we'll never have enough cash to do that. As a matter of fact, if we're successful at attracting higher income jobs to the county, as we're more successful, that's just going to make the housing cost more. So I think tax credits is the way to go to provide affordable housing.
I guess in some way, we kind of, I mean, when the land bank program, I guess we kind of have that because then the land's not taxable, right? But just the development is. So we sort of have a situation like that. But have we ever explored anything like that, Barry, as far as?
I'd have to get Bruce up, you know, to speak to it. I mean, obviously with Live Local, that's,
Yeah, I mean, so-
that goes to the heart of it. That's
Right,
how the
exactly.
developers are developing it is through property tax,
Credits.
you know, forgiveness. And that's automatic at 80%, you know, or below. We don't have a choice in it.
We can opt out of the 120, right?
We have opt out
Yeah, we have
of the
opt out.
80 to 120.
Yeah.
But so, you know, it is a deferment on future revenue that we would have coming in. I'm assuming the only thing we could do is on the county side of that property tax, not on the school side, you know,
Yeah, right.
and stuff. But I'll let Bruce speak to it more broadly. I'm not sure. It's certainly something we can research more.
You know, it's an idea I think we should explore.
Yeah, we can certainly research more and look at this. The 4% and 9%, you know, tax credits, I think that kind of speaks to what those are, but go ahead, Bruce.
Yeah, it kind of sounds like we're talking about two different sources, one being tax credits. Those exist in terms of the federal programs, the low-income housing tax credit programs. Those are issued either by the state of Florida, housing authorities can issue those, and the Housing Finance Authority. So in Caitlin's presentation, she touched on the 4% and the 9%, the competitiveness. So those systems are in place. In terms of property tax exemptions, there are also existing property tax exemptions for affordable housing. Definitely not an expert in those, but we could certainly bring somebody from the tax collector's office to kind of explain those. It has a lot of different mechanisms in terms of the incomes that you're serving, if you're a nonprofit, if you're not a nonprofit. So a lot of those have been in place for many years. The Live Local Act did provide other additional tax exemption opportunities, mandating that new developments that had 70% or 70 units or more, 80% units would be tax exempt, and then having that 80 to 120 threshold, which is now a local decision whether or not to opt out. Frankly, we haven't seen much interest from developers because of that. We're now taking that into our equations if we're looking at a project, knowing that they may get that tax exemption. We're taking that into account as a subsidy that the local government would be providing and oftentimes reducing the amount that we'd be willing to recommend for funding. So, we can do some more work on that, but from what I've seen, just a property tax reduction is one of the mechanisms. That's one of the tools in the toolbox, but by itself has not generated too many additional units.
That brings up another point, is that discount on live local, that's for commercial properties that they're gonna, if we had a tax credit program together for properties already zoned residential, which I'm not hearing that we have.
Well,
then-
again, I think we can research more about what types of programs and what type of incentive that would provide. And also, I think to your point, whether the developer wants cash or whether they want a future property tax break. I mean, that's really the difference between the penny, you're putting money up front, to help them buy down that cost, or whether they would have to then finance, they'd have to come up with the financing for that gap in the project, and then have future credits. So we can research all those. I think, this is the beginning of a discussion. We can look at those, and see if there's others that have done things like that, and bring it back to you. And,
That'd be great.
and have more discussion.
I think Caitlin would be perfect for. She did it. I don't have time to put the program together myself. I'm just one guy, but if I had, maybe we put some resources to it.
We'd be happy to research more and look and bring back ideas.
Commissioner Lepel? Thank you, Mr. Chairman. I would be in favor of looking at it, a tax credit program, but I am wary of getting rid of the penny altogether for affordable housing. I serve on JWB, as y'all know, and every year, a couple years, there's an Alice report. And the new Alice report is not out yet, but I've heard that it's going to be very staggering in terms of how much money it will take to take care of a family of four. And it's not, it used to be, poverty level and what the poverty level is at. And now in Pinellas County, that's not the case. Now it's, people that are considered middle income, are struggling to get by. And part of that is the price of rent, price of housing. And when we go to Habitat for Humanity ribbon cuttings, it's not just low-income people anymore. It's working class. It's, in some cases, government employees, first responders, and so forth. And so I am, not in favor of just getting rid of the penny as a resource. We can certainly look at, the formula and how much money of the penny we use towards affordable housing. But as incomes and wages and as that stays the same and the price of housing in Pinellas County goes up, it's going to continue to be a problem. And so that's just my 2 cents. And when the Alice report is released, I will report back on its findings.
Yeah, I like the idea of exploring the incentives. I mean, what you talked about, as an example, going from 6 units to 12 is just, again, I'm not a developer, but to me, that has a lot of appeal. I mean, it's a different incentive than what you're talking about. I understand that. But I'd like to, for me, I'm not sure that I fully understand what that sensitivity analysis is on all of these different incentives. So if we do go from 6 to 12, for example, that's high on there. Oh my gosh, that's something that developers would love in a heart. If I was a developer, that's like real money to me. To your point, I don't know if that's like right there with it or if it's significantly lower versus some of these benefits that we're talking about through the penny. And the penny's running out for this decade. To your point, I think we do need to, I don't want to get rid of it, but on the other hand, we're just not going to have that much of it. So we need to obviously look at other possibilities. And I really like the idea of incentives because that just takes, it takes us, we make the policy decision, it kind of takes us out. Hopefully we are doing the right policy decisions that are addressing what they're really looking for. But again, not being aware of that sensitivity analysis on different types of incentives, I need some guidance on that. Maybe there's only 2 or 3 different kinds of incentives, and we can look at that and make the right decision, but.
If we can create these toolboxes, it gives some staff some guidance on what to bring back to you. And
Well, I certainly, yeah.
And we struggle with density because neighbors don't like that change, and so
We just had
it's a combination.
Yeah, we just
Each
had that
site's going to be a little different.
Yeah, we just had that 3-hour session the other day on that very thing.
Yeah,
Getting smaller plots of land versus the traditional larger.
We're built
plot.
out.
Yeah.
I mean,
So again.
so they're tough decisions.
We just have to, thinking through that, and again, I give the state a hard time on this live local stuff, but, there's a thread there that says, well, if there's some industrial land that we don't want for, because we do have that. It used to be all industrial land was carefully protected. There are some industrial lands that are different than other industrial lands. I wouldn't mind using some of those, using these 2-for-1 increase in.
And this Teal study did a
in
good
your
job of
thing.
outlining that, because we tried to separate that out, and that's the reason we asked Whit to take that on, is because let's kind of relook at our industrial lands. Is it really industrial lands? It used to be an industrial land, and now it's got condos all around it. Well, it's not really an industrial land anymore. But the Teal study was designed to kind of update that to where we knew what we were really looking at as employment sites.
Yeah, it's good stuff, and we used that with a company that wanted to add more jobs, and they said, we'll take 25% of that land that you're going to build on for jobs and put housing right there.
Right.
And it worked really well. So I mean, it's like not all industrial is created equal, but when there's chances like that to do both, it really works. So I like the idea of exploring incentives, because we're not going to have that much penny money left. We don't know how we're going to structure the next penny, whether it's going to have this in it or not. That's to be determined, but anyway.
So there's a lot of stuff today we can take and chew on it, and employ some assistance and bring some things back to you and have another good discussion.
So I have some thoughts. What I would want, if you look at investing into a tax credit program, I want to know timed out. So if it's a tax credit for 10 years, 20 years, how much is it going to be? Because in the tax credit, it could be that we're giving them more money that way than we would give them in penny. And then you're holding future commissions. You're holding them responsible to a budget, could be a budget problem if these things go for 30 years or 40 years. It's kind of like the CRAs. We're trying to rein in those CRAs because they keep extending them and extending them. And a CRA should never go for 60 years. Well, should tax credit go for 60 years? And then you're giving them more money in tax credit than we ever would have given them in penny. And is the life of the project that many years later still a viable life of the project? And so, and then when you work with incentives, you're picking losers and winners, and this was something we debated in the legislature a lot. Why does one company get an incentive, yet the next door neighbor company doesn't? It gives an unfair balance to, it's like when we do it for businesses. We're going to give this business, I'm going to use a car wash because that's not what we're using, but we're going to give this car wash tax credits to come in and put their car wash in. But the car wash that's already there, or another car wash that's coming in, didn't qualify. Only one guy got the benefit, and now he can run his business much more affordably than the other guy. So you're picking winners and losers, and you're saying, well, this guy's going to be the winner, and that guy who's worked really hard in our community for years is the loser. He's not going to get the same benefit. So when we go down these, we have to look very carefully at what we're doing and how we're doing it, because it's complicated. And, at least with penny, we know a set number. But when you start doing tax credits, if you don't start figuring out, we don't know what the tax base is. We don't know if we're going to head into a recession. And Dave, you were in office, right, when we were in 2008? Were you in office in 2009? You were not in office in 2009. So I brought this up.
Not this office.
No, but were you a mayor at the time?
Yes.
You were mayor. So you remember when we had to do a roll forward rate just to make the same amount of money to pay our employees as the year before. So we would have to raise our millage rate just to make the same amount of money as we did the year before, which that's a big tax increase during a recession when you don't want to have them. But what if we hit a 5-year recession like we did in 2008, 9, 10? And then you've got all these people that we're giving tax credits to, and yet we're going to have to raise the taxes on the local people just to keep police and fire going. And so it's just, you're making a commitment long-term to future commissions that could be detrimental. And so I think we have to, and then those of us that had to live through that, it was the hardest thing in the world to do, to say, all right, I think the county, how many county employees, I don't know if anyone here, Jewel might remember. How many did?
Probably about 1,200.
We had to lay off 1,200 employees just to try and keep the millage rate the same or only raise it a little. And it was an incredible, painful experience. And it wasn't just 1 year or 2 years, it was like 4 or 5. And so I will always, I will never forget it because it was incredibly painful. And so I love the idea that we want to come up with all these different incentives and good ideas, and they sound great today. But I tell you, if you make a long-term commitment, they may not be very great later. And so I think we should explore it. I think we should look at it. But I would want to know long-term, what's the impact ongoing? And we still won't know because we don't know the future. But that's kind of where I stand on all that.
Great points. The other thing with Penny, too, is that our visitors help pay for that.
Correct.
So,
They pay a third of it.
right.
On that density bonus piece, it really goes to the heart of it. We're not talking about money. We're talking about more units, which means more money. And of course, can I make a deal that says we get to do some site work here at the commission to make, I'm kidding, guys. I always get frustrated by it, but if we go, to your point about when we go 2 to 1, we go from 6 to 12, then we have smaller projects and the community gets more involved, obviously. So it's going to matter where it is.
Right.
And so that'll be more challenging for staff if we do that. But I do think that goes to a lot of the issue that we're talking about. It doesn't talk about future monies. If anything, it's more. And it really maximizes the value of the land underneath by encouraging a little more density. So I just think we have to be careful with it, but I think that's what we need to study more. Sorry, thank you, Vince.
Thank you, Chair. Yeah, I agree with with Commissioner Egger's last point. We have to be really careful about, just automatically increasing or doubling density. I mean, running the last year and a half, I mean, that was one of the largest complaints I heard from residents, is that the county's already overbuilt, too developed, we're dense enough. So I just think you have to be really careful. And I mean, Mr. Steinbeck, since you're there, I guess, in that point, is there a requirement, or could we create a requirement where that 1 unit out of 12, could it be kept empty, that affordable unit? And the developer could say, hey, well, I keep these 11 full market rate, and that 1 affordable unit that I got the density for, I could just keep it empty.
They could, and yeah, I mean, unless there's the monitoring on the backside. Remember, every unit you create as a function of a county program must be monitored by the county.
Right.
So much like the LIHTC projects have to be monitored, and they have people to answer to, the county does too. So that, we've talked a lot about how that works, and enforcement and this sort of things. They're imbued in the code amendments and things, and there's a lot of procedural guidance about how to care for those kind of issues.
Okay.
I think that the gamesmanship is limited. There's always questions about that come. Any system you create somebody's gonna try to game it, right? I mean, that's where it's a human thing. But there's a lot of guardrails in this space for that and ways to manage it. The harder part is when you start getting into who benefits later from like the equity of something, or there's some ethical questions and public stewardship of money questions around that, I think, too. Like, we're just cutting checks. Like, should we be doing that, or should we be asking for some equity? Like there's other bigger possibilities besides just tax breaks that could be imbued in this, that could be very useful. It's just outside of the realm of what you all are normally comfortable doing as a local government. But 10 years ago, were you in the housing business?
Yes.
Are you in it now?
Yes.
So what's going to happen 10 years from now? There's going to be some other innovations that are available to you, and the future looks interesting, I think, in terms of the creative space around how public-private partnerships can work.
Thank you for answering that. And I agree with, Commissioner Scheer for tax credits, but, I realize, Commissioner Peters, over viewpoint that, we do have to be careful. So I think it's worth, researching and getting more on that for tax credits. But has the county ever looked at mortgage credit certificates for homeowners?
I don't know the answer to that.
Okay, because I know like Jacksonville and Broward County, so if you're a first-time home buyer, you can get from the IRS up to $2,000 a year annually a credit towards your income taxes. And so, and we can do it through our local housing authority to where, a first-time home buyer can get a mortgage credit certificate, cost them nothing. The county just has to be willing to work with it and report it to the IRS. And then that's up to $2,000 a year credit that they get back on their federal income taxes. That could be, 1 month's mortgage payment for a lot of people. So I think we really need to look at any and all possibilities for incentives for home ownership. Because what we've been doing since 2019 with everything that we heard, we spent $100 million, and it seems like a pebble down a well. And so, I don't know if there should be a moratorium for 1 year of, penny subsidies so we can really retune and refine how we're going to spend that last 17%. But, I just think, the path that, it's a penny down a well, and there's a huge void of affordability, and the only thing that we've been left with are a lot of market rate rentals that have been subsidized. Unaffordability still, has gotten worse, and so there's a lot of market conditions, but I really think we need to retune and refine what we're doing today and going forward. So.
Commissioner, so we'll do some research and bring this back,
And the only thing
later
I
this
will
fall.
comment to the comments that you made were, if I'm a developer and I've built 12 units, I'm not going to leave one empty. It does, they look for return on investment, and they maximize their income. But I understand the point you were trying to make with it. I just think there's a lot here, and it is a more comprehensive look at what we should be, doing. So I appreciate the effort this morning, but I don't, when we say the word research, Barry, I don't want research to mean like 2 years. It's more like, and then I know it's not
year
2
and a half.
weeks
No.
either. So somewhere in between 2 years and 2 weeks.
We'll probably bring it back this fall. We maybe later this summer. Let me get with staff. There was a lot of ideas thrown out. Let's gather some information, and I'll give you a better timeline once I'm able to meet with staff.
And any of this that needs a quicker look,
Yeah.
as you guys are going through it, just bring it back to us before that. And
Okay.
say, hey, yeah, we looked at that to what Commissioner Nowicki just said. Yeah, we're going to put a freeze for a year and relook the program. Bring it back sooner.
For the next 2 months, we're pretty much
I know,
back on
I
our
understand.
agenda. So,
I get
looking out in August, September, we'll get a timeline, and I'll bring it back to you.
Thank you.
Okay?
All right. Anything else? All right, thank you very much. Good presentation and good discussion, everybody. Thank you.
So Commissioners, just so, from a timeline standpoint, I have to leave early today, so I'm going to get as much as I can get done, and Jill will come up and finish the rest of the agenda. I got to catch a plane for my daughter's college graduation, so I'm not missing that, no offense, but the next item up, it says budget forecast. It's more of a prelude to going into the BIS meetings. This is really kind of just setting the stage. This is kind of the doom and gloom story that we're going to tell you about the challenges that we're dealing with the current budget. We'll have a lot more information and a more long-term look at the budget later here in July prior to or simultaneously when I present the 2026 proposed recommendation on the budget. So this is kind of a work in progress. We literally are just getting some of the information in from constitutionals. I haven't even had a chance to sit down with Ken Burke. There's a lot of requests, you know, and we'll have to sort that out as we kind of go forward in the budget. But wanted to give you kind of a fresh look. I think Chris's last proposed slides that he sent to me was about 4:30 this morning, so it absolutely is a work in progress. And
So this we didn't get too
no,
early.
you didn't get this
I was
in
looking for it,
advance.
and I saw nothing, and now
we,
it's there.
We emailed it out earlier because
Okay.
he was updating throughout the night. Last night we met and kind of
That's fine, I felt a
going
little,
through
you
this, and it is absolutely a work in progress.
You didn't get it, I got it.
Yeah.
Thanks, yeah, right.
Well, you should have been up at 4:30. Look, no, no. So this is definitely a work in progress, but I'll let Chris kind of go through this. I'm going to chime in and kind of do this with him. This is just giving you kind of here's some of the issues that we're dealing with at a staff level and the challenges presented as we go into the 2026 budget, okay?
All right. Good morning, Commissioners. Chris Rose, Office of Management and Budget, and thank you for having me here today. So I'm going to start with something we're familiar with. We've seen this pie chart before. You can see how the general fund in particular in the current year is sliced out. I'm not going to exactly go through it, but you can see where the funding is going and in what percentages. So we know that one. And then next is reaching back 2-4 weeks or so from the strategic plan recap. You had given us some direction coming out of that. We are going to be we're in the process of conducting a long-term budget sustainability assessment. We're going to do some stress testing on it and see what the future looks like, what it could look like. There was a desire to reduce the millage rates. There are a desire to use other funding sources ahead of the property tax supported general fund. Fees should be gradually increased rather than waiting many years in between. And keeping the reserves at a maintenance level according to the policy. So we're going to go for the bottom line up front here on the fourth slide. First of all, using a 4% estimated property tax roll growth, which is not official. It is something that we're using for our planning right now. Using a 3% salary increase, again, for planning purposes. Keeping the dedicated millages, the 3 dedicated millages for infrastructure, for transportation infrastructure, set at the same rates. Including high priority decision packages, those that we absolutely need to do, and we'll talk about those in a minute. Building reserves back over a multi-year time frame, so I'm going to pause here. We have approved $78 million of spending on the 3 storms. So that puts a dent in our reserves. We're not going to build that back over 1 year. We're going to build it back over a couple of years. It would not be fair to a 1-year budget to try to get it all in one shot.
I have a question real quick. So that reserves that we've been spending out on the 3 storms, how much of that is FEMA reimbursed?
The majority, but not all of it. So,
And it'll probably come in over the next couple of years.
yes, sir.
And I know it takes several years, but so most of that is FEMA reimbursed. So it's just a matter of making sure we have some to float us in case we have a couple more storms before we get reimbursed. So then we look at the long term. Once we get that reimbursement, we won't be focused on pulling in reserves likely.
There's still probably, 10, 15 million easy that is unreimbursed.
Somewhere in that range.
Out of that, amount.
Right.
And so so it's not all going to all be reimbursed, but, it's
A
pretty
good percentage of it.
Yeah.
Okay. Thank you. I understand.
Like we authorized Kevin to continue to have Tidal Basin on staff after the state stopped. That was $3 million right there, right? Okay, it's things like that, but.
Did we get any money back from them for poor performance?
No, on our side, we worked it well, and we'll just leave it at that. So, but $3 million we're not getting back. But that's one example, but there's a lot of little examples like that. And so that'll add up to around the 15 million.
So if we could just, keep track of that reserve funding percentage number that we debated last year. Frankly, I'm still against that, but it is what it is right now.
Well,
But it'd be nice to know, like what we've dropped down to,
Yes, sir.
what we're gonna, what we're gonna be working our way back to, and how, because to your point, in 2 years, we'll start getting some of that money back. So if we're incrementally raising to get back to it, again, to that, I guess it's 20.8%.
Yes, sir.
That, I want to just see that picture as it starts to unfold, and keep us up to date if you could.
Yeah, these are exactly the questions. This is wonderful. If you would give me about 5 slides, I've got that number for you, so, okay.
Hold on one second.
So, since we're paying down reserves now of money that we're going to be getting back from the feds, does the FEMA money have to go back into reserves?
It goes back to the fund it came from, so it would go back into the general fund.
Okay, alrighty.
But our intent is obviously to build back our reserves, and you'll see where our reserves are here in a couple of
Okay,
slides,
alrighty.
which is below our target.
And I'll point out, you want to be very careful when you're budgeting to put recurring money towards recurring expenses and one-time money towards one-time expenses. You have a structural balance at that point. If you get out of whack with that, you're making a problem for a future budget director. So I want to keep an eye on that too. So the bottom line up front is the last bullet here. We're approximately $11 million out of balance in the general fund right now with these assumptions that we put on the screen in front of you. And that's going to be our challenge as we move forward. Now, a couple of things that go into that, some of the drivers. Generally, the BCC departments have been flat. There are a couple of exceptions, and we have challenged departments to go further than just flat, to go further lower, frankly. We all did that together.
And just as a kind of an overview on that, you'll see it in the BIS meetings. You'll see a lot of your departments that have reduced and found ways to absorb higher contract increases, things like that within that. They've been doing that for 5 years. We've challenged them continuously for 5 years to reduce their costs. But we also have had to add areas, like for instance, remember a couple of years ago with parks, we did not have rangers at all the parks. And so we had issues with that, with a senior that was lost out on Wheaton Island. There was no one there. Okay? And a cop coming that's unfamiliar with the area, unable to search. And so we increased staffing just to have minimum coverage levels for our parks. So we've actually expanded where we need to by reducing in other areas over time. And you'll see a little bit of that as you go through the individual BIS meetings. I just give you that for context because it depends on the specific program we're talking about.
Yeah, on that previous slide, at the very bottom, you said we're $11 million out of balance in the general fund.
Yes, sir.
That's not reserves.
Correct.
Right. This is an ongoing operating budget.
Okay,
This is
I
your
just-
little over $1 billion general fund.
$1 million.
$1 billion
Billion.
general fund.
Where did that, 1 million, okay, thank you, I wanted to get back to that. because
To
I
give
thought
some
we were-
context
I thought
to
we
it.
were talking reserves, and we're talking general fund.
No, sir.
We're talking
And
general
back
fund.
to the reserve, it's still about $7 million per percent?
I would prefer to check that, but that's not far off.
Okay, thank you.
Yeah. So we had talked about BCC departments. Next up are constitutional officers and appointing authorities. Some have managed flat, some have not. There are some fixed costs that are a little different on their side than on our side, especially in the sheriff's office. The sheriff is seeing his healthcare costs go up greatly going into both the current year and next year. As well, there's been a change in law at the state level for FRS, specifically to first responders and high risk. So that's causing theirs to go up, whereas we're not seeing that, and you'll see it in the next slide here. Appointing authorities, some have taken the same challenge on their own to come to a flat, and it's been a good iterative process. Some of the budget drivers we're seeing out there are, on the county side, the health insurance is not rising. It's actually flat right now. I meet monthly with the actuarial, as does Mr. Childress, the HR director, his staff, and my staff. We get together. It's looking very flat right now, which is a blessing to us at the moment. That's good. Property and casualty insurance is growing slightly, which is also good in a year after a storm. FRIS is going slightly, just actuarial increases, not.
This is on the county side, not on the sheriff's side.
That's correct.
Does the sheriff's office use the same health insurance that the county has?
They actually do. They have their own policy, but they actually do. The sheriff is very familiar with managing healthcare. We went in great detail through this with him, and it's his actual cost. Remember, he's self-insured just like we are. His actual bills that he's paying out have increased. And so, we're still going through that with him, but he's seeing increased costs. It's a fixed cost. Same thing with the FRS. They give him a rate, he has to pay that. That's up significantly over last year, and it is what it is. I mean, it's dictated by the Florida retirement system and state legislature.
Electricity costs are growing slightly, not at the fast pace that they have the last couple of years. Here's something, though, that we're seeing is contractual and professional services are rising at an inflationary rate much higher than other areas of the budget. So not changing the scope, the same service is costing more in 26 and in 25 right now. Fuel and auto parts are remaining pretty flat. And we are working to catch up on deferred maintenance in facilities. We have significant deferred maintenance in some of our facilities, and we're keeping an eye on that in this budget as well.
And this is a challenge because this has been going on for several years. I mean, Chairman and I were out at a facility, and they were showing us their leaking skylight, right? And that's because the roof needs to be replaced. And so we've not kept pace on a lot of our maintenance. Bill has a request in that I won't be able to fulfill in this year's budget, but it doesn't mean that the need's not there. And so that's just a challenge that we're going to have to deal with.
That roof was particularly bad.
Yes, it was.
So if we could next switch over to some context on revenues, and I'm just going to pull out two revenue sources. We've already talked about one of them, the tax roll. So there's historic growth of the tax roll, 7.3, 6, 13, 11, 9, and now 4 is what we're looking at. So less than half of last year's blended rate growth. There is a lot that goes into that 4%, and the property appraiser's office is working diligently to meet the June 1st deadline. But we are seeing some new growth, and that is good. But we're seeing a significant amount of the reverse, demolition, coming off the roll, especially due to storms, but for other reasons as well. So that 4% is our best estimate, but it's one of the biggest challenges we've got.
We'll know this coming up here on June 1st, what the final number is. Certainly we've conferred with the property tax appraiser. The interesting piece is last year we had $1.1 billion of new valuation come onto the tax rolls. Thank you, high rises in St. Pete, right? But this year we've seen 1.1 billion, but we've seen almost 2 billion of things coming off the tax roll. And we think a lot of that, he's doing some additional analysis of people appealing because they're not in their home, right? And they're taking that off, and so they have that. That'll come back. A lot of that'll come back at some point. The question's when. Is that a year, or is that 2 years, or so those are some of the variables that are kind of unknown at this point. But just to give you a kind of a sense of what's going on within the market in terms of our overall, rate and valuation.
And then similarly on sales taxes, 18% in 21 was coming right off of the first year of COVID. So it zoomed back at that point and has decreased and is, in all candor, a volatile revenue source. So we want to keep an eye on it. You see it was even negative in 24, small growth in the current year, and we're using 3% right now for 26.
Why was it negative in 24, Chris?
I don't have a good answer, but I have asked the question, so we're looking into it, but it
It
was.
just seems like, I mean, that's a big roller coaster there.
It was something, and
So I think I have some thought, because a lot of it, a third of it is tourism. So we had a record-breaking number of tax collection in the hotels, but we didn't sell out all the rooms. Like in the past, it used to be we sold out all the rooms. This time, the rates for hotel rooms went so high that we collected more money for the hotel rooms, but fewer people were here. And it's just because the price point is so high. So you had fewer tourists here shopping, right? And it's because the price points were so high. And so I know that just with tourism, that was the thing in that year, because the people going to the restaurants and the shops was lower than it was in previous years. But the only reason the bed tax seemed so high is because the
Price.
hotels went
Average
from,
daily rate was so high.
250 to 400. And so when you
there's
start
probably-
digging into numbers, that's just one rationale that I would have for 2024.
And you're coming off of 2 years of 18 and 11% growth, so it's a
And that's
kind
when
of
the
a
cruise,
flattening
the
out.
cruise markets were still, started to go, and so it took a lot away from our tourism. So, our tourism do apply at least 33% to our sales tax, and that's, it's funny, you can look at those headlines and go, oh, we're doing great, but when you dig into the details of percentage, you can make numbers just do so many things that. But that's just one example of, I think, why some of that was down in 2024. We had huge tourism increases during COVID, and then after, when the other tourism destinations, international markets opened up, cruise ships opened up, we took a hit in the number of visitors. We just had high collections because of the high prices.
Chris, our bed tax income, sales tax, bed tax, as a percentage of our total sales tax income, do you have a sense of what the bed tax represents as a percentage of the total sales tax that we
So-
get?
two different things. The bed tax goes over into the Tourist Development Fund separate.
That's not included in your
Not
revenue
in
numbers
here at all,
here?
no, sir.
Okay.
And then sales tax is actually shared from the state, and it's not a dollar for dollar return to us either. There's a formula, actually benefits smaller counties a little more than it does counties like us. So we don't get every dollar back.
Could we get some actual revenue numbers on sales tax, just to get a feel for what that is? And those bed tax dollars, those hotels, they also generate sales tax, so the sales tax comes to us.
Yes, sir.
or Goes to the state and it gets divvied up.
Yes.
Could we just get a feel for that?
Yes, sir.
That'd be
We'll look through it and see what we
Just some relative
Yeah.
numbers. Thank you.
So, moving on from revenues, just a couple more overview slides. We do have some proposed fee increases that we are looking at, that we will be bringing before you. In Public Works, the surface water fee that Kelly has come to you and talked about. Water and navigation fees, we're looking at raising those. Utilities user fees, now this is not the rate fees, this is the user fees for people that come in for specific uses, so that you don't spread it out across the whole system. It's targeted to the people that come in. Building fees, we're looking at potentially indexing those to a CPI, and development fees are in their second year of a 3-year process that we're looking at. Airport is looking at its fees, and solid waste, Paul came and talked to you a couple weeks ago about both the tipping fees and the Lauman collection fee.
And each one of these will be called out as part of the BIS meetings. And so there'll be a specific call out and discussion at that time.
And then one last point is the penny for Pinellas is, I had to choose my words here, but tightly balanced. It is just barely there on the decade right now. So we have brought it in for a balance at the moment. So
That's pretty good.
It's balanced because you're project constrained, okay? We're not putting projects on because we can't. So it is balanced, but
We're
understand,
spending what we're getting.
yes, sir.
that's correct.
And saying no. So the projection for the current year, I'm going to switch to the current year. All that was next year. No departments are looking at going over their budgets in '25. There's the $78 million that we talked about for the 3 hurricanes. We are expecting, hoping, projecting $20 million from FEMA in the current year and roughly the same amount next year. If all goes well, it will take some time, though, to build back. For them to reimburse us is a better way of saying it. And then we're looking at, Commissioner Eggers, to your point, we're looking at probably 18.9% at the end of this year going into next year is what it looks like. So once again, building back our reserves.
And that's the reserve level that we debated a year ago or 2 years ago.
Correct.
That was at 15%.
You were right.
What?
I just want to know you were right.
What? Oh. Well, I didn't. The best practices was at 16.9. Staff argued, and the commission supported it generally at 20.8.
Yes, sir.
So that, 18.9 is still above where, again, unless best practices have moved off of 16.7, 18.9 is still above that.
Yes.
Below our target of 20.8 that the commission set. Just for context.
And important to remember that that's one time. It's not a recurring. So
I understand.
Yes, sir.
I get it.
Well, and we also have the ability to internal borrow if we needed to.
Yeah. That was the
Okay,
other.
we do.
And, right, and, I kind of think about that, well, that one time. It isn't really one time because we have to upfill that every year. When the budget goes up every year, and so it isn't necessarily one time.
Yes, sir. No, we do need to maintain whatever the policy is, yes. There is a recurring aspect to it, yes.
To your point, the policy currently is
Right.
20.8, so we have to get it back there.
Yes.
I'm just arguing my little point.
Can we
I-
change that policy to lower it?
Yes, you
We
can.
do that right here. Yeah.
Correct. Well, and remember, you're
I'm
going to have
fine
some,
with that, but I don't think we can.
we're going to be looking, we also have to float money. Obviously, we're going to get this money back over a couple of years, but, thank God we had the 78 million to be able to put out during the hurricane,
Yeah.
so.
And so our last slide is just open to questions. The BIS sessions are coming up. We have 4 days of schedule that I'm going to get out to y'all this afternoon. And we have 2 overflow sessions on the 18th and 20th. So even though departments are not scheduled for those days, I ask that you still block them out because we will very likely be moving departments at the end of the day on some of those days.
Commissioners, that was a very aggressive schedule to get through all of those. I would expect that we'll need the overflow sessions, but we'll see. Because sometimes, you know how that goes. We're done by noon one day and 4 the next, and it's just hard to predict how long each one's going to go. So they've kind of really packed them in with, and then we'll just play it, dependent upon the amount of questions and discussion that occurs.
And as the administrator talked, July 22nd is the date that we've targeted for releasing the proposed budget. One-to-one meetings at any point if you need them. And the 2 budget hearings, the 2 public budget hearings are scheduled for September 4th and 18th.
Do we have an idea in our minds what that internal borrowing amount available to us is currently? If we needed to borrow money, like the arguments against the reserves would be, well,
Yes.
we have the money there, that's great, but we don't. So do we have a sense of what that amount is and where we are now as far as that goes?
I would be guessing if I said it right now, but
We do. We looked at that before. The amount that is in the solid waste fund, for instance, is not all available. There's certain requirements there. So, but we did look at that. I just don't remember what that is, but we can get that for you.
That's fine. Just
Yeah.
part of our overall
Yeah,
discussion.
when we talked about it with Ken Burke, and really about, whether it's an internal borrowing or should we have a line of credit available to us, and we looked at some of the structural issues. That's one of the things we looked at to say what that capacity is. I just don't remember what that number is.
Well, the investment fund balance is pretty healthy.
all funds together investing, yes, it is. And we did look at a line of credit, and the clerk and OMB together determined that it was too expensive to do that, so. So
Yeah,
we
the
have-
LLCs they're not cheap, right? Okay, Commissioner Nguyen?
Thank you, Chair. Chris, thank you, appreciate it. I guess I'm just trying to understand, when we talk about, keeping the millage the same, we're getting a growth of estimated value. Only been here a few months, but, I've kind of heard, a lot of my colleagues, around these tables talk about, reducing our budget and less spending. But it seems like we're going to be, asking the residents to pay more in fees, pay more in taxes, and that, we're kind of, I don't know, not reducing, growing. So, I mean, can we reduce?
Well, Commissioners, as we go through this budget, you'll get a firsthand look at each and every area and each and every department. You'll see that, like, for instance, 42%, that one slide, I don't know if you were in the room or not, is the sheriff. Okay, the sheriff's a people-based program, and he's got fixed costs that are increasing. The only way he can redo it is, to reduce his hold vacancies, or, I mean, those are the types of challenges that we're going to face. His FRS cost is going up. He doesn't have a choice. It's like a bank loan. He has to pay it first before he does anything else. His healthcare cost, just for his employees, is going up. For us, we're committed to the Shelter contract for the hangar at the airport for his aviation unit. That's $1.8 million we committed to a couple of years ago. Well, now the lease is due to start. So those are increased costs that we don't have a choice but to pay. So while we've tried to hold the line on expenses, I've also offered, as part of each and every budget, areas that you could reduce. And so those are baked into the BIS meetings, but that's on the county commissioner side. That's the 18% of the general fund that other departments will report to me. Okay, there's 70, or what? Do the math. 82%, right? He would have corrected me, but 82% of independent agencies, the sheriff, clerk of courts, and others that have real challenges. And so those are the types of discussions that we can have during these upcoming BIS meetings.
Yeah, I mean, and I appreciate.
And before we do that, we also go to the fees, because some people say that, well, you're doing this and you're doing the fee. The fees are fee-based services. And so if we don't increase the fees, then that means the general fund or other people are subsidizing the cost of those services. And so they should be kept up to date because it's a fee-based service.
Yeah, and so I mean, I understand what you're saying, but I mean, when I'm trying to put everything in context, and it's like, I talked about, wholesale reclaimed water rates. Well, we don't want to, increase our wholesale rates. Our last strategic session, April 3rd, there was a line item for 2% budget cuts across the board, which we took out. But, because staff, didn't want to, make those cuts internally, they want to, leave it on our desks to deal with. But so when it comes to increasing, it seems like it's fine to increase, but yeah, when it comes to a cut, no recommendations want to be made. And so that's, my point of view, and I guess for us to decide.
Commissioner Lavelle?
I do think, and this came up, I guess it was 2 years ago, that, it is our job to, or I believe that it's our job to instruct Barry and Chris where to cut, and not just say, hey, cut, 5%. Because if we do that, I think they're going to say, okay, we're going to cut 5% across the board. And for instance, the largest part of the budget, I think 42, 44% of the budget is the sheriff's budget. So if we say cut 5%, they're going to cut 5% across the board, which means the sheriff gets cut 5%. I believe just philosophically that if we want to cut the budget, which I support doing, we should say, hey, cut here, cut here, cut here, cut here, and because that's what we were elected to do. And so, you know, we give them the overall, hey, we want to have a lean budget. They present us a lean budget. If we don't believe that it's lean enough, then we say, you know, here are other places to cut. Because I just think that that's, you know, our job, so.
And when we do go through the budget, the BIS meetings, you're going to see the fee increases. You're going to see all of the requests. So every request that came before us, you'll also see reductions, and where your departments have tried to trim and hold the line on cost. But you also see ones that we've built into the budget, into the proposed budget, and the ones that we have not. We went through and, have you built in the proposed decision packages?
It will be by the time.
It will be by the time it gets there. So we set and really tried to hold the line on, what do we do with new requests? But some of those are just fixed. They're increased cost. We don't have a choice. Like I said, the shelter for the hangar, we've been talking about that since before I got here, 7 years ago. And so that's a $1.8 million that's going up. And you'll see, we're trying to figure out how much we give Bill to keep the roofs from leaking and causing long-term damage. We can use some one-time money for part of that, but there's an ongoing cost to maintaining our buildings. And so we're trying to come up with a balance on how do we address some of the pent-up demand versus ongoing maintenance costs that needs to be built into our base budget to where they have that each year. So those are some of the decisions you'll be able to see as we break out each of the budgets and go through that during the BIS meetings.
Would any of the, we haven't really talked about we've been really focused on the $813 million in HUD money, but there's another $400 million that is, so when are we going to kind of talk about that?
Waiting for Matt to chime up. And so that's the mitigation money, and we have an internal meeting coming up here. I don't know when. Do you recall, Matt? Next week, to talk about that. There's some structural issues with the way that it was set up. It goes back through a committee. It's made up of all the municipalities. But that group that normally makes those decisions are used to getting $3 or $4 million a year, and they come together, and it never makes it to my level or even Kelly's level, and they divide out certain projects. But they're using that same structure for this big $400 million. We said time out. And that's not an appropriate structure. So we're going to meet internally, but we have a meeting coming up with all the city managers to elevate that to be more of a regional discussion. So we're just now getting into that discussion to bring back ideas and recommendations to you. But I don't even have any idea where we're going with that at this point.
Dave, do you have a comment?
Yeah, just real quick. I couldn't let Commissioner Latvala's comment go without a comment back, which was, the philosophy of giving you the cuts versus giving you direction. And I don't think it's either or. I think it's kind of iterative process. We tell you 5% cuts. You go out and give us some suggestions. You just said, give us ideas and suggestions of where we can find the money. Because I don't pretend to know the budgets of each of our employees in the details that they do. So I do think that to your point, I don't want to say 5% cut means we're going to do it across the board, but I think we're just looking at overall numbers, and then you can tell us how that might look.
And that will be in your budgets that you receive. We've built in 3% and 5% cuts into the departments that report to you and to the appointing authorities. We did not build that into the constitutionals because I don't think they would have provided those to me. And those are the hard parts because how much can you get out of an 18%? Because that's what you're talking about. Actually, with the other appointing authorities, it's a little more than that. But you'll be able to see those. Those are listed out on each and every budget that we're going to go through here in the BIS meetings.
And like we're talking about the sheriff's budget, I mean, he's got increasing costs coming to him from the state changes on the retirement programs?
Correct.
So that's going to be big. We also have some empty spots in his deputies. I know because I've been told out that there's not enough deputies out there. So
Correct.
again, you're trying to be careful. If you do too much, then you're going to make it even more difficult to attract talent that we need. So I think those are things we'll have to weigh out as we look through it all. So anyway, that's all. I just want to make sure that.
But you'll be able to see, you'll be able to see if you said, give me whatever, we've listed them out and say, okay, in Belcher Road, we're going to cut the grass 8 times a year versus 12.
I know, it always comes back to grass cutting.
I always use it because it's a real example. Like, it's a contract, and there's 1,000 other things that you can do. And I don't even think grass cutting's in there, okay? But I use it because you can see it. It's a choice that we made on a service level.
When it gets up over the top of the car, almost.
But it's a service level, and you can take that and apply that to any department. We choose to fund government at a certain level, and here's the level of service we're choosing to fund that at. And we can choose to fund it at a lower level. Here's the outcome if we provide, less resources in any particular program.
Well, I think Commissioner Latval, I heard he was going to raise his hand to cut grass on the Saturdays.
I mean, I just will make mention, since we always talk about that example, that there is a city in particular, and I won't mention where, but there's a city in District 4 that I think fined one of their residents $40,000 or $50,000 while we were in the legislature for not cutting their grass, so.
They did, didn't they?
Yeah. You may know where I'm talking about, Commissioner.
Commissioner Peters, did you have any comments?
So, yeah, I digress to a different subject. So what I like when Jeremy presented on the fees, he gave us the average usage of water is 15,000, right? And, some people have larger lots than others, and I get that. But if the base rate, the average is 15,000 gallons of water, I like having a low price there and then a higher price for every gallon you use other than that, because then the resident has the opportunity that if they think their water bill's too high, to do more conservation, be more conservative with their water use, and then they can get their water down instead of complaining to us and saying, lower your rates. Well, we're going to give you a base rate, 15,000 gallon is, now for somebody who has a 1 acre or 2 acre lot, 15,000 is just based on their lot, that's going to be high for them. But for the average resident, if they complain about their water bill, but they have the ability to use less water to get their bill down because the rate is significantly different, and it comes out on the bill, this 15,000 you were charged this much, and for these thousands you were charged that much, and if you went to the higher threshold you were charged that much. And then it becomes the responsibility of the homeowner to be more fiscally conservative versus blaming the utility or the county. And so I like that structure, I like that fee structure, and I think in the stuff where we charge fees, I think that's a great way to go, because then the onus is on the resident to be more fiscally responsible if they want a lower bill. And it's in their power to lower their bill. Where if you just do a flat rate and it's high and they're being conservative, they're not getting that win for being conservative. And so I really like that. I think anywhere we're doing fees, to do something like that, that puts the power and the control in the hands of the residents where they can save their own money, I think is a smart way to go.
I agree.
All right. Anything else on budget? Chris, thank you very much.
Thank you, Commissioners.
All right, now we're on to strategic plan update.
Hold on. Oh, there it is. Okay, good. All right. Good morning, Matthew Spoor, Assistant County Administrator. We're going to go through real quick the strategic plan update. I know this will look familiar to you as we've been discussing it several times this year. So where do we start? Well, the current strategic plan framework was adopted in September of 2023. This framework lays out the vision, mission, values, priorities, and goals. Fast forward to this year and the BCC strategic planning session in February, where you discussed your key projects and priorities for future fiscal years. Then on April 3rd, during a work session here, the BCC reviewed those and reach a consensus on the top strategic priorities and projects. We've taken those and we've aligned them. We're calling it Appendix A so that we can keep track of the priorities as they may change throughout the future years. And Appendix A is the 2025 BCC priorities and projects that are aligned to the fiscal year 25 through fiscal year 30 strategic plan. The purpose of our discussion today is to show these to you. You have them in front of you, but then also gain your feedback and your consensus. So Appendix A, again, introduces the Commission's refined priorities, or what we're calling BCC strategies and projects within the context of the fiscal year 25 to 30 strategic plan. Each item has been aligned to fit one of the existing goals or priority areas, and this allows for transparency and reinforces alignment between your guidance when we talk to departments throughout the year for operational planning efforts and then also the budget build-out. So you have this document in front of you, and I won't read it all to you, but I'll go through real quickly. There's for resilient infrastructure and environment, priority number 1, there's 5 BCC strategies, and there's 5 projects. There's 2 under goal 1.1, which is improved traffic flow efficiency, and the strategy is implement enhancements to transportation system. The project is conduct a work session focused on the MPO and transportation planning strategies. Goal 1.2, maintain and enhance county infrastructure. There's 2 projects. Simplify and expedite the land use application process in collaboration with your municipal partners and Forward Pinellas, and prepare for the 2028 Penny for Pinellas vote. Goal 1.3, increase access to green space. We have the evaluation of the TDT funding for future infrastructure projects at the parks, beaches, or community infrastructure. And continuing resilient and infrastructure environment, goal 1.4, a BCC strategy is strengthen resiliency by renourishing the beaches. Goal 1.5, strengthen resilience. I'm sorry, the first one is improve environmental quality. The second goal, 1.5, is strengthen resilience and adaptation. You have a BCC strategy to expand stormwater and flood monitoring systems and enhance communications. You have 2 projects. The first is develop storm hardening strategies and flood response plans. And the second was the debris, the substantial damage inspections, and third-party permitting across the county. I should state that some of these projects and strategies obviously we've already begun and we've already begun working on. Goal 1.6, ensure sustainable water management, advance regional collaboration to invest in countywide infrastructure improvements. That's a BCC strategy. Now we move to priority number 2, and there's 3 projects in priority number 2, and this is healthy and safe communities. The projects fall under goal 2.1 and 2.2. 2.1, the project is expand community outreach for the Care About Me program. And then the projects under goal 2.2 are analyze and enhance the animal rights ordinance and align with best practices, and then research enforcement strategies for gas station generator compliance. We move on to priority number 3, prosperity and opportunity. We have 1 strategy and 2 projects. The first strategy is under goal 3.1, assess both short and long-term housing availability, prioritizing strategies and increasing home ownership. Goal 3.3, a project, expand employment options, workforce training, and initiatives to attract new businesses. And then goal 3.5, investigate opportunities to integrate unmanned aerial vehicles, or UAVs as they're called in the industry, and passenger drones at PIE. Last but certainly not least, we have smart service delivery, priority number 4. You have 3 strategies and 3 projects within priority number 4. 2 under goal 4.3, simplify and accelerate building permitting processes with same-day review capabilities, and that's a strategy. And the second strategy is explore AI applications to help streamline county operations and improve efficiency. Goal 4.4, you have 1 strategy and 3 projects. BCC strategy, strengthen long-term financial stability through proactive fiscal planning. And then your projects, there's 3 I just said. Review the county charter, on form of government, update and refine the county's naming policy, including exploring renaming opportunities such as the Bayside Bridge. And then last but not least, capital improvement program, cost-sharing incentive initiative for contractors. So those are the outline of Appendix A, which would then, we're looking for your feedback and consensus so that we can then bring that back to you for adoption with the budget process over this summer.
We'll bring that back earlier if we're in agreement with the way that's aligned.
Questions, comments? Commissioner Wicki?
Yep. Thank you, Chair, and thank you, Matt. Good presentation as always. I guess, I briefly highlighted right before the meeting to you, goal 1.1, first project, the word achieve. In our April 3rd discussion, there was no discussion about, achieving a regional support for the MPO. So, I don't feel comfortable, I'm comfortable having a workshop on an MPO strategy, but I wouldn't be comfortable with the word achieve regional support. So that's just my thoughts.
Commissioner Eggers?
Well, again, and I'm fine with, to achieve support. Maybe that presumes that we're going in that direction, if that's your point. We can say something that's different than support, but I want us to continue, for me, is to pursuing the study, the process that we're going through, because the point I was trying to make at our last meeting is that even those of us who have had invested time in this process aren't there yet. So this is an ongoing study that if you look at Tampa Bay Water and the impact that that regional effort has done to this area, it's just over the top monumental. I'm not expecting that in the same way, although, as an example, we did get the size of the project, the interchange at State Road 60 and I-275, because we had one project for the region. We were challenged that particular year, and it was really from there that the state really got on board with saying, you guys really, need to be trying to work together to get more of that consensus. So I'd like to explore the idea. So if we change the idea to achieve regional support versus to pursue more discussion about regional support, I'm okay with that, because it is an ongoing process. But please make sure that we continue to look at that individually. And don't just turn away from it because it says the word regional, because there are folks out there that feel strongly that we have no business in regional, and I think that is an absolute mistake, and I'll continue to expound on that as we go along. But we have a lot of work to do, so, that's, to your point, I don't have an issue with changing that, but.
Well, in my perspective, this does not prescribe any specific outcome. Achieving regional support could be, we're going to continue on our own way, but we're going to continue to collaborate and where it makes sense to do that. So there's nothing in here that prescribes that there's going to be a single regional MPO. And I was speaking to a group about this last night, and nothing's done. There's no vote's been taken. Nobody's been dissolved. No new organization has been created. This is just strategies to achieve regional support for whatever that may be. And that, like I said, that may be, we're going to continue to have separate MPOs, but we're going to collaborate on projects where it makes sense to do that. So I'm fine with it as it is. If we wanted to soften it something lightly, I guess I could be okay with that too. But I don't see this as prescribing any specific outcome. So
I'm fine with the way it is too. I'm just offering that as a compromise thing. And next week at 9:30, anybody who wants to go down, the TMA, which is the group that is just having that discussion on regional stuff down at the PSTA headquarters, we'll be having more dialogue. In fact, one of the things we're going to talk about is the feedback that we got at that tri-county meeting was maybe we need a smaller group. Instead of 25 members, maybe we need to have 10 or 15 members, whatever that is. And we made that specific as a point of conversation at that meeting, because We're trying to take input as we go through this process. Because it is cumbersome, and it is complicated, and it is all of the above. But again, it takes, it takes brave leadership to investigate the opportunity. And I think that's where I'll leave it. Thank you.
All right, so consensus, do we?
I'm fine.
Consensus, leave it as is? Would you want
fine
to change
leaving it.
something?
Well,
As is? Commissioner?
personally, I'm all about Kentucky having a work session focused on the MPO, but I like Commissioner Nowicki. I don't want to achieve any regional support. That's not what I want to continue to look at it. I'm not convinced it's a good idea, so I'm not sure what I want to achieve yet.
Well, and I think that's what the whole conversation is about. We may get nowhere in that conversation, and we may decide to all go in our separate directions, but let's keep the conversation going on projects that we can agree on.
Yeah, and
I mean, it's-
from our last meeting with the Ford Penalty was here, I'm not even sure we have a voice in whether or not it's going to, whether it's going to happen or not.
Right. It may not.
May not.
It may
So
not.
that's why I'd like to have another work session.
Yeah.
What do you mean we don't have a voice? What's your comment on that?
I don't believe that we have a voice as a commission on whether or not the MPO gets merged or not.
We absolutely do.
Yeah, we do.
We do.
We absolutely do. We would have to vote on it. Yeah, we would have
I
to
mean,
vote on it.
whether it's a technical or whether it's an absolute or whether we have influence enough to stop this.
I'm sure we can make a recommendation, but I think that it's,
We would definitely have to vote on it. All the commissions, all three commissions would have to vote on it, as well as the city of Tampa, and I think the city of St. Pete.
St.
as
Peter.
well.
And keeping in mind, we have 4 commissioners on there. So we'll have our discussion here. Maybe getting closer in this case. Yeah, we'll have opportunities here
Right.
to direct the 4 commissioners. Not that we have power over the 4 commissioners on the MPO board, but certainly I think we want to be reflective. That's what we do, that's what we're on that board for, so.
well, having
You're
more
on it.
work sessions on it is, I want to keep talking about it.
Yeah, I think Commissioner Scheer's point is that even if this board votes against it, that it could still go forward with Hillsborough, Pasco, Tampa, and St. Pete all voting for it. I think that was maybe your.
No, you need all of them to agree. If one goes out, then it doesn't move forward.
Okay, I posed that question to Whit, and he thought it was, that's not the answer I heard, but.
Again,
Makes-
we'll
and that
make
makes-
sure that the
Right.
county commissions are supportive of this. It doesn't do us any good to move forward if Pinellas County Commission, Pasco County Commission, and Hillsborough County Commission aren't on board with this.
Right.
So
I agree.
So I can tell you that it will not go forward if we don't have all 3 county commissions on board. It just doesn't have, nor if we don't have the city of Tampa, nor the city of St. Petersburg on this either. So those are all critically important for the spirit of this thing to work,
I agree with you, Commissioner.
just so you know.
And there's no one entity can force the others to force the other to merge, so we definitely have.
We all have to sign
we-
off
We
on
have
it.
control of our own destiny
Yeah.
on that, for sure.
So we just can't sub the word achieve with discuss? I mean, that's.
What do you want to change it to?
Discuss.
Just to
Reasonable.
discuss, I mean.
I'm
what-
sorry, say it again. I
To
didn't-
discuss.
Oh.
I mean, achieve is a pretty.
I mean, I don't want to sit here and burn an hour over one word, so. You know. Okay, so we go with the chief? Chief, consensus?
Yep, fine, just leave it.
Okay, all right. Any other comments on the strategic plan?
Just a couple, real quickly. I promise it won't take long. I just, again, just thinking, and again, I'm not going to get into the specifics of it, but I, again, thinking through our work in the airport area, our work at the TDC, infrastructure development today, and future industries like we're doing down in St. Petersburg at the ARC Center. Again, those things, I just want to make sure we don't lose sight of those as we filter through these strategic plans. I had a really long conversation with Jeremy Waugh the other day about, this early, but this the whole concept of a new pelletizer plant that takes our sewer and converts it to pellets instead of land applying out in the state. And we don't do that. Many of the cities do, and we're talking about having to build a new plant because ours is like, what, 30 or 40 years old. And so we're reaching out to our partners to see if they want to be equity partners in this and would define the size of that. So I think that's a huge infrastructure, and again, I'm not sure that it fits here, but I do think we just keeping a sight of that. And then, you know, infrastructure, just to these points that we were just talking about, regional stuff, about getting more monies here and how that relates to EMS improvements as well. So just a lot of that. Those are just thoughts that I want to make sure that we're filtering through, and it doesn't need to be on here somehow. But that's all. That's all I had.
I thought we did that across Bayou, do we not?
Huh?
Don't we have a pelletizer across Bayou? I thought we did.
We have a pelletizer,
Okay.
but it's 30 to 40 years old. We're talking about having to rebuild a new one.
Okay.
We want to know how many of those cities want to get on board of a $200 million investment, apparently, because there's a lot of state statutes that are coming down, federal statutes, that say they may not be able to land apply anymore. So some of them they don't have the money to do it, but they may not have the money down the road not to do it. So it's a real, and they're talking about trying to get this input by the end of this calendar year to see whether they want to be players or not. So it's really an important piece. So, I mean, whatever. Good point.
All right. Matt, were you done with your?
I am.
Okay. All right, do we have kind of consensus to move forward with this? Sure. Yes, yes, yes. Okay, all right. Thank you, Matt. Okay, next we are moving on to form of government.
Chair Scott, before you move on, can I address something that was discussed earlier as far as borrowing capacity?
Yes, please do, sir.
And Della's passing out something for me. And Della, if you would give Chris one of those two at the end, I would appreciate it. Thanks for allowing me to interrupt the meeting on this topic, but I heard you all
always
talking
welcome, Ken.
about this, so I figured I'd come over with an answer. First of all, Chairman Scott, I heard you did a magnificent job yesterday with the keynote. Unfortunately, I wasn't able to be there, but I heard it was extremely moving and inspiring at the Fallen Officer ceremony.
Thank you.
So thank you for representing Pinellas so well at that event. It was beautifully done.
It was an honor to do it, so I appreciate the opportunity.
And before I get into the borrowing thing, Commissioner Peters really talked about the recession from 2008 and 2009, and I was here during that time. And one thing that I hope the commission thinks about, because who knows when we enter a recession again, you may think the attitude, gosh, the public has to tighten its belt during a recession, which they do, and we should do the same in government. We should always be careful in government. But I can tell you this, in 2000, in that period of time when the recession was the strongest, the demand on government services increased tremendously. If you remember, we cut back on, especially in our parks, with the cutting of the grass and maintenance, and our park attendance was going way up because instead of people taking vacations or trips to Disney, they were taking their family out to the parks. And so at the same time when people were depending on the parks the most, we were giving the least amount of services on the parks, and the grass was growing. And I know in the clerk's office, although we were state-funded, that was a time when we had the avalanche of foreclosure filings. We're reducing staff with the most work coming in. And also criminal statistics went up during the recession, too. And so there's an impact on government. It has that paradoxical impact that here the economy is doing bad, but the demand for government services, and I'm sure those are just a few examples I pointed out. I'm sure there's a lot more that Jill, through her experience, although her name's Barry Burton right now, Jill can point out. So just be thinking of that. I just put that little tidbit in your mind is what's the demand for government services during recession, and how will we deal with that when you're thinking of reserves? Because this is during the good times, it's good to bring up those reserves so that we can properly fund those items during the bad times. This is one of my favorite reports. This is Where is the Cash report. And I think it's very telling as to different funds. And Chris has a copy of this, and we work closely with OMB on these types of things. As far as capacity to borrow, and we took a big step forward when we passed that internal borrowing policy for the county. there's two types of borrowing we would do. And the one we were really focused on doing with that policy was emergency borrowing, because this is when we contacted Lee County especially, and they said that they needed upward of $300 million available for them to expend in order for them to meet the demands of the hurricane that hit them. We have capacity for probably over $400 to $500 million of emergency funding on a very temporary basis. When I say temporary, it's short term. This is not long-term debt, would be 2 or 3 years would have to be repaid from a lot of various funds. A lot of these funds have restrictions on them where we cannot borrow against them. But the solid waste, although there's some restriction on that for the liability that we have to pay out, but the tourist development has a significant amount of money in there where you could take a short-term borrowing from those funds. So I want to assure you that we have great capacity for internal borrowing on an emergency basis. And we're also looking, and Chris is part of this, and the finance staff, obviously, of long-term borrowing. We know we have the new campus coming up, and there'll be external debt. We want to see how much internal capacity we have to avoid the cost there. I'm always careful to hand this out because there's a lot of context between every one of these. Like the general fund, the money comes in November and December, and by September and October, when a hurricane would hit, is when we're most cash poor because the tax revenues come in with property taxes in November and December, and the cash in September and October tends to be at the ebb level. So just to give you some context, and there's a lot of these funds, like the medical fund, although it has a healthy balance, we couldn't possibly, because there's all types of restrictions on that as far as capacity you have to have in that fund to be a self-insured health fund. So not all these funds you could borrow against, and a lot has restrictions on it. But I want to answer any questions you possibly have. And Chris, did you have anything to add on that? Thank you.
Any questions for Ken?
So we're still working on the long-term
Yes.
borrowing capacity that we have. Okay, perfect. Right.
That's something we're looking at.
Thanks, Ken. Thanks for being here.
Sure.
Good to see you.
So Ken, while you're up there, Ken has some thoughts on form of government as well. Since you're already at the podium, did you want to?
I'll wait for if you want, if it, okay. Yeah, it's. Okay. Well, Commissioner Latvala will tell you, though, if you have the votes, you stop talking. So, so I'm hesitant to say anything. Really, Commissioner Latvala deserves credit for bringing this topic up, and I think he put it in very good context the other night when we had a conversation. He said, well, we last discussed this 60 years ago. Should we discuss it again? And it's true. Back years ago in 1960-some is when the administrator form of government here came. And I think it served us well. And I appreciate us looking at this. And it's always, hard to say we have great government in Pinellas, but I think we have darn good government in Pinellas compared to other entities. That doesn't mean we can't do better, and we should always look for improvement. And then you look at the entities that are in Florida that do have the strong mayor form of government: Miami-Dade, Orange, and Duval. And Duval has by far the longest period of time of having a strong mayor form of government. That goes back to when they consolidated in the late 1960s. And I think if you look at Duval, it's a case study on why not to do this. And because of a lot of the problems, and you could see this not only in Florida with the strong mayor form, but throughout the country. But I'm going to concentrate really more on Duval County because of their uniqueness. They have their own retirement system. And what is so prevalent when you have a strong mayor, a lot of times it's easy to kick the things which are not real scintillating down the road, kick the can down the road. And that's what they have done. In their pension plan, for example, in 2012, their pension plan was funded at 39%. That means they had 61% unfunded liability. And this article talks about the crisis. How did we get here? It was like mayor after mayor said, I'm only here 8 years, let the next guy take care of it. And that's often what happens when you see these types of things. And what was so bad about this is they've gotten to the point of a crisis where they have now passed a half-cent sales tax just to fund government pension. And of course, when they passed that, the people that passed it not for their time, but to say it should start in 2030 during another person's term of office. And it will go on to 2049, half-cent for that period of time to fund their pension plan because it wasn't funded on a regular basis. You know, it goes mayor after mayor, and they say, well, you know, I had other priorities during my time as mayor. And could you imagine having such a crisis here in Pinellas County? But that's not the only one. This article, which is it's like 20-some pages, talks about the electric and water utility up in Jacksonville. Absolute fiasco. And again, term after term of mayor, and they tried privatizing it. Their former mayor, who gets high regards, is under federal prosecutor investigation for this whole process here. And I'm not saying that this would happen here in Pinellas County, but this type of mentality of not taking care of the basic needs. You know, a lot of what we do in government is fairly dull, especially in county government. I hate to say it like that, but it's so important. And us taking care in the clerk's office, our IG's office, I asked them to do an audit of our infrastructure, of our utilities, because I want to make sure for y'all and for the citizens to make sure that we were putting the money into our sewer system like we should. And actually, the report came out very, very favorable, that Pinellas County does a great job in making sure that our sewer lines are current, that we have a capital plan for all of our sewer lines and our water system to make sure that it's meeting the needs. And you don't have to look too far to see a sewer system which isn't making the needs of their citizens. And it was especially evident during the hurricane. But these are the types of things that happen, I hate to say it, when you have a strong mayor form of government. One of the things of having a professional administrator is they take care of a lot of the nuts and bolts of government, which isn't too exciting, but is very necessary, especially when you have a crisis. So I think we have, if obviously on any of these types of forms of government, you could put what are the strengths of them, and there are strengths of having a strong mayor government as far as the visibility and the economic development may be potential. But there's also weaknesses, and I think the weaknesses greatly outburden the strengths. So I appreciate Chair Scott that having the opportunity to present on that topic. Yep. And I also appreciate Commissioner Latvella for bringing it up, because maybe once every 60 years we need to analyze this thing. Thank you so much.
Didn't mean to put you on the spot there, Kim, but I appreciate that, your perspective. Commissioner Latvella.
Thank you, Mr. Chairman. I think now would be a good time for us to pivot and go over the clerk's budget while we're all gathered here together. No, I did see the clerk the other night, and he told me he was going to be here. And I'd been talking to Barry about this, and I actually asked him the other day. I said, "Is there a way I could pull this?" And he said, "No, because I'm following the instruction of the board." So I'm glad we're having this discussion. And, number one, this was never about Barry, because he has done a fantastic job, in my opinion, as our administrator. Number two, I have no interest in serving in this position if it's ever on the ballot. But I believe philosophically that the person that makes the day-to-day decisions should be accountable to the voters. I just feel that should be, you see that whether it's during hurricane season, whether it's a pandemic, Barry is the most powerful person in the county aside from the sheriff. And I shouldn't mention his name, but the county administrator is the most important person in the county. And it's somebody, and the administrators, he works for us and we're elected. But the outside of the voters who vote for us, that they don't really have a voice in that. And so I don't believe that there's anything wrong with putting it on the ballot and letting the voters decide. In my political career, I've found that voters are not wrong. Whether it's us putting term limits on the ballot via the CRC, like last year, or, whether it's, when they have a choice between candidates. Voters know what they're talking about. Voters are smart. And so, I think we should give them the choice of what form of government they should have. I think having this discussion once every 60 years, last time we had this discussion, Commissioner Eggers was a young man. And so, here we are again. I do appreciate my good friend, and I don't use that term lightly. Mr. Burke is a dear and good friend of mine, and I like how he used Jacksonville as an example because he knows that's where I grew up. And I am very familiar with the issues in Jacksonville, and I would not want those issues coming to Pinellas County. With talking about this with Barry, I came up with other ideas. If we did not have an elected county position, elected county executive. And that's, while we're talking about this, that's reforming the chair position and giving the chair more, more authority to do things. And some of these areas that have, a county executive, the county commission chair, some of those terms are 2-year terms. And the executive, the county executive, operates as the executive. The commission operates as the legislative branch. Now we don't have that, but maybe we look at having a chair have a 2-year term. So that way it gives the chair longer time to set the agenda that he or she wants.
Longer runway.
Yeah, a longer one way, so it's not just 1 year. And if we did that, I think that, you certainly could, that gives you longer time in that seat. And I'm not trying to curry favor for my little idea here, because I think this is going to go down in a blaze of glory. But I think that that's, something that we should look at is ways of empowering the chair's office. And I think both you and the previous chair, Commissioner Peters, have, kind of set the tone of, you've each had reforms in your own ways of how to run that office. And so I think we just keep building upon that and creating other ideas. So that's just my 2 cents, but I appreciate Mr. Burke being here.
Thank you, Commissioner LaValle. Commissioner Peters?
So I think these are all great thoughts. I love your input, Ken. I think it was spot on because it just so politicizes. You can look at cities like New York, Chicago, where it becomes very politicized. And what I like most about the form of government we have is when we had a bad administrator, and we've had a couple, that we could fire them. And the commission that was here at the time fired them. But if you get an elected person, you can't fire them. And it's difficult to have them removed. And the ones that got fired and some that were forced to leave, some of them, they didn't get fired or forced to leave soon enough. But if they were elected, you can't get rid of them. You can't have them leave. And we have examples right in our own backyard where never took care of the sewers, never even considered it, and it doesn't fall on one mayor, it falls on several, and it's all because we don't see it, and I'm not going to do that in my time, we're not going to spend that money now, and then crisis. Now, that's not to say that cities with city managers haven't done the same thing, but I think our form of government works, and it helps keep corruption at bay. And yes, an elected one would do good for economic development, but we have examples of great economic development where they didn't take care of the stormwater, they put concrete everywhere, and now homes that never flooded before in a summer pop-up rainstorm are flooding every time it rains, because they aren't held accountable. And then the council members or the other commissioners, their role gets diminished. Their role of influence gets diminished. And so you're elevating one person to enormous power, and you're taking the other six, and you're really diminishing the authority and the power that they have. And so I'm not a fan of that, but I do like the idea on changing the role of the chair. I don't know if I support 2 years, but just like on the Tourist Development Board, when you're the chair and you come in and you weren't on that board before, by the time you figure up and come up to speed what they're doing, half your term is over as chair. But having the vice chair on there, and Dave didn't support that idea. He voted against it. But he's on there now, and he has now spoken in support of it, because now him being on that board, even though he's not a voting member, he knows exactly the direction that board is going, and Brian's leading it in a direction, and if he agrees or not, he has that historic knowledge, so when he's the chair, he steps right in and he goes. And so what I would like to see is the chair, and we could discuss year or 2 year or whatever, but I would like to see the chair have more input on what goes on the agenda, because we don't have input on what goes on. We have no say-so on what goes on the agenda. If we bring it up at a workshop and we ask for it, Barry lets us have that, or if we vote for it, Barry has to let it have us, but the chair doesn't have a say-so on what goes on the agenda. And I think the chair, I think we should take a look at what the chair has authority to do and see if there's things that we want to expand that. And I'll tell you, that year goes by so fast. I mean, you're almost halfway through it. It goes by so fast that when I was coming to the end of mine, and with all the storms, and it was just so chaotic, there are a lot of things I didn't get to accomplish because of the storms. And I kind of wished I had another term, but I also, think it's important to let Brian's leadership rise up, right? And then Dave, if he's going to be chair the following year, then his leadership gets to rise up. And I think if you do 2 years, then you have some people that never get to serve as chair. That could happen anyways. But I think everyone that's been elected by the citizens brings certain kinds of leadership and assets to their position as a commissioner. And I think when this commission has confidence in somebody's leadership and makes them the chair, I think we can afford them more authority on things. And so I agree with you wholeheartedly on that. I would not support the elected mayor, because I can just look around at nearby cities and know why I wouldn't want that. And I like the authority to be able to fire somebody that isn't doing their job. And there's the one that they fired last, I felt they waited too long to fire him. I talked to commissioners, about a year and a half before they finally let him go. And I know my words fell on deaf ears, but they finally came around and they let him go. So you can elect somebody, and I grew up in the Chicago area, and I would never, ever look at what happened in that city. And because it's so political, you can never change that agenda. So based on the population and the politics that are going on in the population, you can have cities that can never change because of that, and it's so political. And I just think that the executive shouldn't be political. It needs to be, when the rubber hits the road, what's the best thing for the citizens, not what's going to get me reelected. What's the best thing for the citizens? And the sewers are the best example. You can't see them. Stormwater, you can't see it, so you don't have to pay attention. But a brand new library with a nice name on it is great. And that's kind of how cities operate, and they aren't taking care of the core function of local government. And so I just think that this leads a balance to ensure that we're always taking care of the core functions of local government. And I've been in things with elected officials, and most of them don't even know what the core functions of local government are. And that's, you get an elected person, you say, well, what are the core functions of local government? And they're like, well, making sure our parks are really nice. And that's something we do, but it's not our core function. And there's a lot of people that don't know. And what's really sad is there's a lot of elected officials that don't even understand the millage rate. They think if they've never changed the millage rate, they think they've never raised taxes, because they don't. And I can tell you, there's a ton of elected officials that don't know, that have said to me, I've never raised taxes because I've never raised our millage rate. When in fact, every single year they were raising taxes. And so I just think it's better to have somebody that has the education, has the experience, and understands administrative government. If they've got those degrees and they've taken that public administrative law and they've taken public administrative courses and they've done the work, they have the experience. I think that's just the way to go. And I think that when the citizens elect us, they're doing their job at electing us, and then we use our good judgment to decide who the leader is, just like when we pick the chair. But I definitely support your second thought on giving more authority to that chairman position.
Real quick, and I have to leave soon to go to a JWB meeting, so that's why I'm going to be leaving, because we're voting on a interim CEO today. But just a quick thought, and I, certainly respect your opinion. The one thing that I would mention is we've had Pinellas County commissioners get indicted for corruption under our current system, and so, I wouldn't say, oh, just one system, makes corruption less likely than another. Bad actors are gonna, a politician that's, doing bad things will happen in any system of government, and they should not be around anywhere with power or authority. And so I just wanted to make that clear. But with that, thank you.
Commissioner Eggers?
Thank you. First of all, as I do all of my colleagues here, and I have the utmost respect for Commissioner Latvala bringing this up. I have no issues talking about it. I think it's always healthy to do that. And to his point about me being alive 60 years ago, he's right. I was. I'm just giving away my age, but don't tell anybody I said that. I really listened intently to what Ken Burke said. I too have a lot of respect, and he is a good friend as well. And I share a lot of it because it's more, I think the message is it's more that a county administrator that is a professional county administrator versus a political county administrator. They can be one and the same, but not often. I just think that, you tend to look more long-term. You just operate more long-term with long-term thinking. And I think Commissioner Peters, one thing I was going to put down here was accountable to voters. They're much more accountable under our current system, much more accountable. We can dismiss a county administrator rather quickly if there's a reason for it. So to me, accountability is the most important thing. And again, we're not talking specifically about Barry today. I think he's done a great job, and so this conversation obviously is outside of that context for sure. And the voters, they do have. We are their elected folks to make these kinds of decisions. But I do think the long-term perspective is so critically important, number one. Number two, I really think the current system has worked pretty well. I do remember being a mayor in Dunedin and not being happy with the county commissioners at that time because, well, they had a city or county administrator here that just, frankly, wasn't what he should have been. And really, there was a real battle between city cities and county at the time. It was not a good relationship. It didn't last long. The county, the commissioners saw that and made that change. So I do think, and I do think that the system works. And by the way, Barry got his power during that storm because the 7 of us thought that it was best that he have that power. And that doesn't mean that next week we couldn't take it back and say, no, we don't want you. We want to meet daily during that storm till you bring those things to us so we make that decision on a daily basis. That's not the way it worked. We felt it was important to give him that power during the emergency. And so I think there's all kinds of ways for us to rein it in when we need to have accountability and just, fire somebody if we need to. The system seems to work really well. I mean, we have our 4 district commissioners and we have 3 at large, and I think it's really, I mean, I just applaud the group that brought it forward when we had 5. We had 5 individual commissioners that were voted at large. And they changed that system so that we could get more specific representation. And I think it's important. You guys hear from me about North County. I spend a lot of time up there. And yet, you guys go up there all the time, and you see that also. But I have a little bit more time there, so you get that perspective. And I think, Commissioner Peters does in her district. And we're all on top of everything, but I think you get that perspective. So I like what we have now. I'm certainly want to keep an open mind to discussions, but in my heart, I really like the system. And the final thing I would just say is to Chris's point about, or Commissioner Latvalas' point about the voters know, and they do. But I wouldn't want a referendum discussion to come down to one-line things that say, oh, well, if you want true representation, pick a county mayor form of government, when in truth, you have that now, a true form of government. I mean, in fact, more accountability. So does that come out in a referendum marketing program that that people will go through to present their perspective? So I just think we have to be very careful with a system that seems to have worked really well. I think it's worked for the last 25 years the way it's set up as far as the 7 folks. And anyway, those are just some preliminary thoughts. Thank you.
Commissioner Nowicki.
Thank you, Chair. Yeah, it's just a lot to take in. I appreciate the detail and thoughtfulness that everyone's kind of put into it. I do think elevating the chair's role a little bit would be helpful. I also think maybe requiring the county administrator to do a state of the county. So that would then let the residents know who is more running day to day, and that maybe you'd get more feedback from residents that say, oh, I like the administrator or I don't like the administrator, to make it more engaged. I think that maybe there should be the chair should sit on the executive committee policy that in disaster that the administrator works with, the sheriff, the school board, and other people that serve on the executive policy for decision-making, that, possibly the chair serves on that executive policy committee as well, to kind of represent our viewpoint and help making the decisions that the county is doing. And that would kind of be a good balance of some of the concerns that, Commissioner Latvala had, of those decisions not being made by an elected. At least, we have some sort of a finger on that. I also think possibly if, maybe we're only 7, but, maybe smaller, committees, maybe with some staff integrated for, budgets or, RFP processes that are going out, it's maybe the chair should look at proposals before they go out to bid to approve that. I mean, there's been times that it's like, oh, well, we didn't even know that was going out for bid, but yet, it went out for bid. So I think just there's smaller little levers that would give, the commission a little bit more juice, if you will, but yet, balancing those non-political overarching concerns that could be adapted if you had an elected executive or mayor. So I think there's a way to strike a good balance, and those are just some of the thoughts that I have. So thank you.
Commissioner Scheer, do you have any comments?
Yes, Chair, thank you. Just real quick, I've been to many community meetings and met with many people, and I've brought this up several times, and I have not received any affirmative feedback that this is something that anybody's looking for or wants. So I don't, the voters' accountability, I've talked to the voters, and they don't really, this is not something that's on their mind or they want. I was a little shocked to hear that you don't have more say in the agenda. I thought you had a lot of say in the agenda, and I'd like to explore knowing, I have no idea how to get you more say in the agenda, but if there's a way to find out how that happens, let me know. And then, is there a provision right now that precludes a chair from running for chair again? Is it?
I don't think so.
Okay.
just always kind of had the vice chair go in with that type of change. I said, no, we haven't. We typically have had the vice chair would go, we'd vote that person in. It's kind of like you're voting for your 2-year plan. It's kind of how you've been here longer than I have, Dave, but that's kind of how it's always worked.
There's nothing to prevent it.
Add one thing real quick to that, is that when folks are the chair, I'm not saying always, generally speaking, when it comes to November, they're very thankful. After a year of intense, there is a lot you do.
A lot you don't realize you have.
Yeah, you have to do. You're ready to say, okay, it's yours, Dave, or it's yours, Kathleen, or,
I would say my staff feel that way. All
Yeah.
staff feel that way. Staff is
yeah.
like, I'm ready to be done with this.
Yeah, it does make some sense, but I do like your idea about when we cede authority,
Yeah.
like in EMS times, that our chair would, not to make those decisions, but he would be there to see the decisions being made and have another direct report back to us at the next meeting to say, hey, guys, Jill's making some I just don't like what Jill's, I'm kidding, Jill. But, bring it back here and we have that discussion. There's another person, one of us, that's there. I like that idea. When we cede power, I think it's important. And maybe some other things that I would entertain. So. I'm sorry, I didn't mean to interrupt you, Commissioner Scheer.
Were you done, Commissioner? Okay, all right, Commissioner.
Just, I guess, piggyback off of Commissioner Scheer's point. So what would we, Joel, what would we need to do to have the chair set the agenda? How does that process work?
I think it might be something that you would look at potentially in your board procedures, manual. I think that you would really need to kind of also work with Barry because, it really depends on what agenda you're talking about. So for instance, I'm generating the items that come on the county attorney's agenda, and I don't know that there's really a way for the chair to be aware of, what lawsuits we're bringing forward or, how we
Or even have a role in it necessarily.
Exactly. And then, the rest of the agenda is largely made up of, you've got land use and zoning cases that are going to come forward as part of the process. And you all have talked about that a lot here over the years as far as like getting it through the process quicker and, things like that. Other times, a lot of the stuff you all are looking at, they're the things that make county government go. They're the contracts. You see them from BTS. You see them from Human Resources. So I don't know that it's feasible really to have the chair involved in all of those, decisions that go on a day-to-day basis, given all the other roles that the chair is performing on a daily basis. But it's certainly something that you all could talk about a little bit more. I think your agendas for today's meetings are a little bit more driven by you, the 7 of you here, because it's really the opportunity for you all to talk about policy in a sunshine setting, but not having to take a vote. So I know that really doesn't answer your question, but I think it would be a little difficult to have the chair, at least in all of the items coming forward on your regular agendas, just given the routine nature of quite a few of them.
Yeah. Certainly to be able to look it over, like Barry's developed the agenda and he throws it at Brian and said, Brian, did you have anything like that you wanted to bring up specifically? This is what our staff has put together. And just let you take a a 1 hour look, a 6 hour look, whatever's, whatever's feasible in that tight,
Right,
because
yeah,
there's a
there's-
real
yeah.
tight schedule to get things on the agenda.
Right.
Maybe there's that, a little bit of time for that, like, yeah, I'm good, I don't have anything, I don't know.
Well, do you have, I mean, does the chair have the right to place things on the agenda? No. So it's a courtesy when you do place things on the agenda?
When the chair wants to bring something to the agenda, it comes to a workshop, we discuss it, and then we all agree that it goes on the agenda.
That's the process that we use
Right?
now.
So Chris Lavelle wanted to bring this topic up. It was brought up at a workshop, and everybody agreed they wanted to discuss it, and so here it is. So, so that's how we work, and it works good for us. I mean, it does, it works good for, I'm not saying it doesn't work for us, it does work for us. And maybe, three of us have been chair before. Maybe, we talk about it or talk to Barry about things that we think might be more, when I became chair, I thought there was going to be more, and in the beginning, I thought there'd be way more work, and there really wasn't that much more work, and then, boy, we got midway through, and then, of course, hurricanes happened, and everything blew up. But it could be that we just kind of, like I said, on the TDC, I made just one suggested change, and I thought it was a good change.
By the way, I don't remember voting against it,
I
but
think
if
you
you say
did.
I did, I did.
I think you did.
But I also told you I thought it was a great move after the fact.
Yeah,
so
yes, you did.
I was
Yes, you did. I love that.
I was wrong.
Yeah, I love that he said, by the way, I think this was brilliant, and it really makes that a seamless transition. Now, when I was vice chair, Janet was the chair, and because of sunshine, you can't be inclusive, right? And so I was never included, and when I was chair, if I couldn't do something, I would go to the vice chair and he would do something. I never got included in that stuff. And I think maybe Janet just attended everything, I don't know. But as vice chair, I never got included in stuff. And so when I became chair, it was like, here you go. There wasn't communication on how the administration part was. There was no preparation for what the administrative part was, and which wouldn't violate sunshine, it's administrative stuff. But there was just nothing to help make that a good, smooth transition. And Dave's been chair, so I don't know if you're doing anything to help for a smooth transition, but he's going to step into it easier because he's done it before. But if it was Vince, or if it were you that were stepping into it next, what we need to do is have it inclusive for who's ever following to make it a smooth, easy transition that it's seamless. And it could be that Dave's going to want to do something very different than Brian does, and he may. I think I did things differently than Janet did, and that's the nature of things. Everybody's got different leadership styles, but if there's a way that we can come up with some things that, I like the idea of sitting in the EOC. I would have liked to sit in the EOC. Of course, after my house got destroyed, I wouldn't want to be stuck in the EOC. Because I would have wanted to get stuff done because my husband wasn't in town and he's disabled, but then you have the vice chair step in, right? So I do like that idea. So I think maybe what we do is we think about how maybe we can empower that position.
Enhance the chair's position a little more.
Yeah, enhance it a little bit more, empower it a little bit more.
It's not to take over the decision-making,
No, it's
but
just
it's
to be
to
more
be
inclusive.
there and to be
Right.
present
Right.
and have the dialogue that,
Yeah.
Barry might want to kick it around.
Because, and I'll say why I think that, is the administrator is non-political. And that's what I like about it, it's non-political. Because therefore, they're looking for core functions of government. But there is a role that is political. And the administrator is never going to play that role. And shouldn't. But the chair being in some of those positions will because there are things that he may do and go, wait a second, that just might really tick off the governor and that could hurt us in the long run. You know what I mean? Because he's not going to do the political, but we know the political. And so, so I think, and that was just one example, but there's other examples where, well, let's go do something and we're going to do something that's going to tick off a real, the senator that's the Senate president or something, that the administrator's not political wouldn't know that. But the political people would know that. And so I think there's value in that. And when you have relationships, and we've shown this when you have relationships with a U.S. senator and you have relationships with a congressperson, again, that political relationship can play to a benefit to the county, where the administrator is non-political. So they don't have that benefit. So I think,
Having that perspective in the room,
Yes.
just to share those views.
yeah.
Because Barry doesn't think about the political, he's trying
No.
to do his job.
No,
Unless he's here with us.
Yeah.
And hearing all that
And he doesn't
feedback.
think that I can make a phone call to Senator Scott.
Yeah.
He's doing it now. He's better about that now. I've bugged him enough over the years that, why didn't you just ask? You know, you got people in the room that have cell phone numbers with personal relationships that can make a difference, use them. But his role is very non-political, and I think that's a good space for that. But I think there's a role for us based on political. So, yeah, I think that's a really good idea that they should be at the table and in some levels on some things. And we can decide what that looks like.
All right, well, I've got a couple of thoughts here. Well, I agree with a lot of what's been said here, and this has really been a great discussion. And so I'm really glad that Commissioner Latvala brought this up. And everything that you said earlier, Kathleen, I thought was just perfect. Absolutely spot on. And, you know, as I've thought about this, you know, when I was first elected, I was, you know, when I was running, I had a lot of people come to me and say, well, we need, I want to say a lot of people, a handful of people, that were really pushing that we needed a county mayor. And not being in elected office before, I had to really think about what did that mean. So I really did think about that and looked at other examples around the country and around the state, and did some history, some research on Pinellas County history, and came to the conclusion that what we have is working. I mean, I don't want a solution in search of a problem, and I want to make sure we understand what problem we're solving for. And I haven't found a problem that we're solving by going to an elected mayor. And I think, you know, there are some benefits to either side, but I think this has served us really well. I do really like the idea of enhancing the chair's office somewhat, because I think you are a little, I mean, basically, as a chair, you're the first among equals, okay? Which is a good place to be, but I think, you know, in an emergency situation, we provide the authority to the county administrator, but I do think it's appropriate for the chair's office, who essentially is a county mayor for the year that he's chair, to be present at least when those decisions are being made. And to your point about being able to leverage political relationships, I mean, that's the perfect situation that you want to leverage political relationships. But, you know, having Barry has I think 2,200 employees that report directly to him. You know, that's not typically an elected skill set. And even though a county mayor wouldn't have all of those people necessarily answering directly to him, but in that situation, many times you find that everybody serves at the pleasure of the mayor. And even if the mayor's not directing those people, they're directing whoever the administrator is, and that may not be an elected skill set either, where we have the ability to evaluate the county administrator, and if, to Dave's point, we can make a decision very quickly if we don't think that person is doing a good job. So I think we're in a good place. And as far as kicking the can down the road on things that are maybe not sexy items such as sewers, I think a really good example of that is our 3-level service that we have for millage, for paving roads. Would a county mayor have brought that forward? Maybe, but maybe not, because it's not really, you know, that's buying brooms rather than cutting ribbons. And so I think we're in a good place, but I really do like the idea of looking at some ways of enhancing the chair's authority, whether that's through agenda, whether that's through emergency situations, whatever. And as Jewel was saying with the agenda, if you look at our agenda, 99% of it is just stuff. It's paying bills, it's approving contracts, it's land use and zoning things. It's not things that would normally be driven from the commission anyways. I mean, should there be a mechanism for the chair to put something on if something comes up or wants to have discussion about a particular item? Maybe there should be. I mean, I think we can have some discussion about that, or maybe just look at enhancing our policy manual. But I think this is all really good stuff. I mean, I don't not in support of an elected mayor, but I think this is a good discussion about ways that we can sort of maybe improve things and bring some things more current.
And the only thing I would add is, and I think the 6 of us that aren't chair continue to do it the way we do it, so we stay out of the sunshine problems. We bring it here to a workshop, and we say, hey, we'd like to talk about this item, put this item on the agenda, just like we do it now.
Yeah.
The chair's position would be a little bit different, and, you know, his mindset or her mindset for that year is just a little bit different when you're the chair. So I think having that direct, I think there's real benefit there, and we have to further define that so that we're all on board with it, and then Barry understands it. Jill understands it.
I have one thing I have to make clear. I was mistaken and I was wrong. Charlie Justice just texted me and said that he was the one that voted against the TDC vice chair. It was not you, Dave, so I was wrong.
Thank you, Commissioner
I
Peters.
am stating right out, I was wrong, and I appreciate Charlie for setting the record straight that it was him and not you. So I don't know why I thought it was you, but it was him and not you.
All right, well, I think if I can try to encapsulate our discussion here is that I think we're kind of all, or generally speaking, in favor of sticking with what we have, not moving anything forward at this point as far as a county mayor, but we want to continue the discussion on what does the chair's role look like going forward. Does that make sense?
Yep. Okay, agreed. All right.
Yeah, I agree 100%. I just want to, maybe have Jill or the Barry, I'd really like to see the chair, if there is an emergency, God forbid, God willing, there's not one, but, have that be, coming up into the season now, that, whatever we have to do to make, if the board agrees that that's a policy that we want to go forward, but to make sure we're ready to go this season instead of bringing it back, towards September or October, that maybe that piece of it we could look at implementing sooner.
I think we might have the ability to do that already, meaning that, like, when we declare a state of emergency, that I think we, and this may be a question for Jewel, but at that point, we decide how much authority that the county administrator is going to have. So we may just be able to do it right then and say, okay, the county administrator has this level of authority, but the chair has to be, has to be in these meetings. So we might just be able to do it right then. Does that make sense?
Yeah, has to or can be.
It has to or can be, right?
Yeah.
Or the vice chair.
You're going to delegate that this summer?
Yeah, and something Barry never does is like delegate the chair to do things. And, during the storms, he was so busy, and I'd be like, do you want me to call the commissioners and tell them there's a meeting at such and such a date? Nothing that would violate sunshine. And so you guys were getting calls from me saying, we're going to have a meeting at 3 o'clock, where Barry always did it. Because he just never put it upon the chair to do things or to give them a job. He's never done that. But in an emergency, he's got 150 balls up in the air. And yes, the chairs can certainly make phone calls. Or the chair can say, we're busy, vice chair, will you make these phone calls and let the commissioners know what the status is and that we're going to have a meeting on this day or whatever, blah, blah, blah. And that he's never delegated work to this side.
Right.
But I think if the chair's role is elevated up, then that chair is more likely to take on, I'm going to make these phone calls, I'm going to let them know.
Right.
And so, yeah, just another thought.
All right. Well, have we thoroughly fleshed that one out for now? All right. All right. Thank you, everybody. It was really, really good discussion. Appreciate everybody's input. All right. So now let's move on to agenda briefing.
Good afternoon, Commissioners. So for Tuesday, May 20th, you do have a number of presentations and awards.
Yes, we do.
That the chair determines.
You opened up that one. Good.
Yeah. Consent agenda is items 8 through 27, containing reports received for filing and miscellaneous reports for filing. Construction property management, item 19, is for declaring surplus certain county fixed assets inventories that are considered scrap, junk, stolen, unaccounted for, cannibalized, or trade-in items. Item number 20 is also a declaration of surplus but this one is to authorize the sale or donation of miscellaneous county-owned equipment, consistent with your existing procedures for this. Item 21, County Administrator, receipt and file. 22, County Attorney, receipt and file. 23, BTS, this is to award a contract with Clifton Larson Allen. This is for our comprehensive security risk assessment services. This will be a not-to-exceed contract in the amount of a little less than $500,000 for the 12-month period.
I think we had a few people bidding on it or letting us know how they did. So I was a
Yeah,
little concerned about the
23.
price, but we certainly did get
Yeah.
a good feel for what the market allows.
Yeah, and how many people
20
are interested in this
Yeah.
kind of work?
23, you said,
Yeah,
right?
23, yeah.
Thank you.
Item number 24, under Housing Finance Authority, this is the 2024 annual report that they are required to provide to you, the Board of County Commissioners. And they basically have outlined the number of down payment assistance, the number of housing bond issues, land acquisitions, or land trusts, for example, including the Skyway lofts that you saw earlier today in the housing report. Item 25 is the Housing Finance Authority's 2024 Housing Trust Fund report. And that is really more of the financials of, you know, what's available for their program, how much was expended and how many households they assisted, and how we leverage those funds to secure additional funds. So I think you pretty much covered a lot of that earlier today, but the full reports will be in your backup. We have the Sheriff's Office, items 26, 27. Regular agenda, under Construction and Property Management, item 28 is Third Amendment to increase the contract with VSC Fire and Security, Inc. for fire protection system services. This increase is being requested primarily because we had a number of unanticipated maintenance repairs, including one that you may be aware of at Public Safety Complex to the fire sprinkler system there. So it's just to increase funding so that we can continue to provide the right services for our systems, fire protection systems.
For Monday or Tuesday, could you separate out maybe that's a big increase, so could you separate out what is a little extra versus what the unanticipated was? Just so we know, out of that 2.3 million that we weren't aware of, what surprised us, or what is additional services, just kind of get a feel.
Sure. Under County Administrator, item 29, you see this item each year. This is a resolution designating and approving our list of code inspector job titles. It's job titles for purposes of those individuals being able to identify themselves under the statute so that they can withhold and take advantage of the exemption under the public records law. And there have been some changes. There's a few things that Barry can do, but none of those fell into this category. So we have the resolution for your consideration on Tuesday. Item 30, Economic Development. This one is for a Amendment 1 to our Renewal 1. This is a data sharing agreement that we actually have with the Florida Department of Commerce so that Economic Development can have access to our quarterly census on wages, employment data, and those sorts of items. Item 31, Emergency Management. This is a second amendment to our MOU with Pinellas County School Board for Capital Improvement Program funding. This is for hurricane shelter retrofitting at the pre-identified schools that you're familiar we use. And it will be, it is an increase from, it's an increase of $1 million from 4.5 to 5.5.
Yeah, Jill, could you just, on Tuesday again, maybe just tell us how we went from 1.5 originally to 4.5? And then now we're going from 4.5 to 5.5. So this is a small, I know there was a big jump, and I just can't remember
Yeah.
I could remember, I thought that I didn't. Never mind.
Some of it's the PDA. We're now, the communication systems. We'll get you a list. We'll get you the list.
Okay, just-
Or it may be in the staff report.
It's
We'll
not,
make
we're,
sure you have
we're
it.
going to go vote on it again. I just tried to remember
Yeah,
what that.
yep,
Thank you.
absolutely. Item 32, Housing and Community Development. This is a resolution approving the Community Development Block Grant. This is the Disaster Recovery Citizen Participation Plan that we're required to have relative to our CDBG DR fund and action plan. And this is what we will use and how we will communicate with the public throughout the execution and administration of the programs under CDBG DR. It's been posted for the comment period. Human Services, item 33, City County abatement funding, 25-26. This is the priority list for the recommended items that you see outlined under the second bullet. Expansion of our warm handoff programs, recovery services, and item 2, medication-assisted treatment distribution and other opioid-related treatment. This one is the Pinellas Matters City County. Karen's nodding yes. Item 34 is the regional priority list for submission to the Florida Department of Children and Families. So again, you're approving a priority list, but that serves a different purpose. In this case, it's the first bullet that lists those items for you. There's no fiscal impact for either of those items. Under Management and Budget, item 35 is a resolution where we are asking to waive the indigent care fee of our code where we serve medically indigent connection with the issuance of the Health Facilities Authority and Health Facilities Authority, Healthcare Facilities Revenue, and Revenue Refunding Bonds. Chris is here. I think if you have any questions specific to this one, it's not something that I don't think you see it. I don't think you see this very often, but.
No, I don't think I've ever seen this.
Yeah, I don't think I've seen it since I've been here.
Is there any fiscal impact to the county?
No, there's no fiscal impact to Pinellas County. The corporation, the
Okay.
housing,
I see that now, yeah.
finance, Pinellas County Health Facilities Authority has to incur the expenses.
So the fee would have been 1/4% of the 25 million?
Correct.
Okay.
Item 36 from Public Works is a maintenance agreement with the Haven at Palm Harbor for the portion of Bee Pond Road and the right-of-way that serves their facilities. They have requested this. They will be maintaining that road segment. So that actually helps us reduce our maintenance responsibility.
Why do they want to do that?
Because it's the only portion, it only serves them. And I think they have some ideas about how to make it appear to be more the entrance to their community. And probably we have to keep easements because there's some utilities in there and drainage. So we'll have easements over a portion of it, but the rest of it becomes theirs.
So they're still maintaining the road? They're just.
They'll be maintaining the road.
Okay, really?
To our standard, yeah.
I tell you, Achieva Way in Dunedin, the neighborhood Waybridge right next door, they maintain that entire stretch from 580
Yeah.
all the way down. It's a beautiful road with tree lining and landscaping all the way down to County Road 1. And they've been doing it for decades. And they have it in their HOA budget to maintain that road to a higher standard in terms of the landscaping. It's beautiful. So every once in a while, you get.
I'm just thinking Tierra Verde, that's all.
Yeah. Well, that's a different story for a different.
Item 37 is from the Utilities Department. This is for hazard mitigation grant program application to the Florida Department of Emergency Management. This would be for the replacement of 10 emergency backup power generators that we would use for critical pump stations in the event of disasters or other flooding events that impact those pump stations. The money for this HMGP is related to Debbie. This is not related to Helene and Milton. That's the big pot of money that you were referring to earlier, Mr. Chair. So just wanted to make sure you were aware. This is Debbie, not the others.
There's so many, it's easy to get confused.
It is. That's why I knew. That's why I asked. Okay, under authorities, boards, officers and councils, BTS has First Amendment to the Cyber Response Team Legal Services Agreement. It revises the self-insured retention amount, essentially doubling it, and it does raise the self-insurance amount for purposes of reducing the risk. That's the short story. Item 39, Housing Finance Authority. This is a resolution allowing them to issue multifamily housing revenue bonds, a principal amount of a little over $44 million, to benefit the OK Riverside LLC, who is the developer, to finance acquisition, construction, and equipping of a 304-unit multifamily housing project in Tarpon Springs at 1589 Starlight Cove. 40, similarly, is also a resolution to allow Housing Finance Authority of Pinellas County to finance an affordable multifamily residential rental project of 144 units located on, it's in Largo. I'm not sure, I'm not finding the street address, but I'm sure it's here somewhere. Here it is, 6727 126th Avenue North in Largo. 41, a resolution approving the TEFRA hearing for the refinancing of the Clear Bay Terrace multifamily housing residential project. This is a reissuance of the bonds for the benefit of Clear Bay Terrace is the project, and it's 101 senior multifamily units at Betty Lane here in Clearwater. 42 is also a resolution for TEFRA hearing related to refinancing of bonds for the Creekside Manor multifamily housing project that's also located in Clearwater. It's a 92-unit senior facility.
Under items 43 and 44, these are both actions to foreclose on liens that were placed against property as a result of code enforcement proceedings. So both of those cases are going to be requests to foreclose on those liens. And I do not anticipate having any reports at this time.
Okay.
Item 46, Barry will have a report. Kathy will be here, as we've previously shared with you, that she's going to be here to update you on our hurricane season 2025. She was a featured speaker this week at the Governor's Hurricane Conference. So,
nice.
Yeah, she's very well known around the state, and that's a good thing. You have County Commission 47 is your appointments to the Council for Persons with Disabilities. You've got some individual reappointments and appointments. 48 is County Commission new business. And we'll recess, hopefully, for a little while, or not, for public hearings beginning at 6 o'clock. You do have item 49, which is a future land use amendment from residential urban to residential medium for the Milla Mania Properties, Inc. property that's located in Lealman, and it's on 40th Street North and 45th Avenue North. It is not recommended for approval by staff, primarily because the staff recommendation of denial finds that the residential medium land use category is inconsistent with the surrounding area, which would result in an isolated 0.21 acre parcel having a higher density allowed than any of the properties adjacent to it. And so staff does recommend denial. The LPA recommends approval on a vote of 4-2. We did have some folks at the LPA hearing, couple people who appeared and spoke in opposition. So that should be a fun one on Tuesday.
Okay, all right. Look forward to that. Commissioner Scheer, do you have a question on that? Or? No. Okay. I just
Item 50 is a right-of-way vacation request by Caribbean Isles, owner of, a public road, to vacate a 30-foot portion of an unimproved right-of-way and vacate a 66-foot wide portion of unimproved petitioned road known as George K. Foyle Road, County Road 113. Staff recommends approval of this vacation. We will have some easements that we'll have to keep for utility, but we recommend the vacations.
Okay.
Item 51 is the resolution making a finding of blight conditions related to the Central Tarpon Springs Community Redevelopment Area boundary. And it would establish the boundary. It would basically follow the revisions that you made to your CRA rules back in 2021. So it's not the open-ended forever and ever kind of thing, but it would be subject to those new rules, and the scoring would have to be completed before bringing it back to the CRA plan to the board. In other words, you make the finding and then you see the plan.
Okay, so, because I've got a problem with this, meaning that we already have 15 CRAs in the county, and we're bleeding off about $100 million a year to CRAs. So I'm kind of having some heartburn with them because Tarpon Springs already has a CRA. So what step is this in the process? If we approve this or not approve it, what's the next steps?
Basically, what you're doing here is delegating authority. Let me take a step back. Because Pinellas County is a charter county, all of the municipalities here have to come to the county to request this kind of delegation. So this is the first step in the process where there's a finding that there's, blighted conditions in the city, which is a finding that the legislative bodies have to make to start the CRA process. And then this would give them the authority to go start preparing the plan and doing what I would call, I guess, the initial steps. The plan would have to come back to you, and as Jill was, going through the discussion, you all have the policy that was adopted that is kind of a matrix on how you look at the different CRAs that come forward as far as what level of commitment the county has typically been willing to provide for the tax increment financing. But certainly, a policy decision as to whether you all continue to approve new CRAs, expanded CRAs, lengthening of timeframes of CRAs, those are all valid concerns. And like I said, given the status of Pinellas County as a charter county, you all do have quite a bit of control.
Right. And I kind of wonder, for the benefit of our new members, that if perhaps we consider hitting the pause button on Tuesday with this to have a work session on CRAs. We haven't had one in a while, but just to get an update. But also, I think it would probably be really good for our newest members who maybe haven't been exposed to that before, to have an understanding of how they work, what they do, and the amount of money that's involved in that. But
Mr. Chair, we do have staff here today if you want to discuss any of the specifics on this request. Because it's essentially the city of Tarpon Springs, so it's one of your partners.
Just a couple comments. I had a chance it's been set up for a while, but I had a chance to meet with the mayor on, what's today? I guess it was earlier in the week, and had a great meeting. We talked about a whole lot of things, including my salesmanship on their, playing with us on the new pelletizer plant, make sure that they're in on it. So I'm already working on that to make sure that we have everybody in on that. But we talked a little bit about this. They have a CRA now, and I don't know where they are in the term of that. It's a totally different area. This is again, from what I understood, it was a more blighted area, so I guess the idea here is that receive a base contribution of at least 50%. That hasn't been decided yet for sure.
That's correct.
Because it could be a one that's worth 95%. I remember when we were doing a Dunedin renewal, they dropped that. They dropped it only to 15 years and only to 7.5-year look-in, and I think they dropped the percentage from 95%, I think, all the way down to 50, but I can't remember for sure. Anyway, so we can talk about that. But my point is that because it's really not a blighted community anymore. And I'm talking about Dunedin's case. So that's open here, and I think each one stands on its own. I mean, I think the idea that some of these areas have really gone from a blighted area and really have uplifted it. And now, I mean, we've been getting the base tax all along. It's not like we're not getting anything.
That's correct. It's
But
just the
there is an
increment.
increase
Yeah.
that we will now enjoy here in the county coffers at the appropriate time. So there's arguments to that one. I'd just like to just at least keep in mind that this may be what we're looking for, if you will. So I just want to make sure that we get it. I think we have to have a presentation on this. Just, I
So
would
staff's
just like to
prepared to, we can chat about it today. We'll be prepared to do a presentation on Tuesday. I would like to let the city of Tarpon Springs know, though, if it's your intention to postpone, so that we could just give them a heads up. It's kind of a drive, for them.
Where is
down here.
so if we approve it on Tuesday, it has to come back to us for final approval?
Right, yeah, Tuesday's action, the requested action on Tuesday, under the statute, as Jill said, as the legislative body, you have to make a finding of blight. You make this finding, then they go back and start preparing the plan and the specifics of exactly what they propose to do and how they propose to do it and the timeline and all of those details consistent with your policy. So they have to bring that back to you to get those details.
Yeah, go ahead, I'll finish your thought.
About how long typically does that process take? They have a year, so there's a year deadline? Okay, end of the year,
So,
okay, got it.
Tom, I think you're saying the end of the current calendar year or the beginning of calendar year '26.
Right.
So probably, 6 months, about 6 months.
Well, I would definitely like, at least before we have to make a final decision, I would like us to workshop that issue, just so we can get a refresher here on where we're at with all the CRAs, but also I think to benefit our
Okay.
newest members here, so.
Could we ask somebody just to come up, maybe make a general statement about this particular, where it's located and the nature of that CRA?
Yeah, sure. Rebecca's here. Come on up.
And one thing I'll add while Rebecca's coming up, and you'll see it in your resolution, the county commission has traditionally in the past, and I can see it's in this resolution as well. Not only do the cities need to come through the county commission for approval, but we have used the county has used the resolutions in the past, and it looks like continuing on to even further restrict what authority we're giving to the cities. So that's, something a tool that you all have used in the past. For instance, you're saying here, we're only giving you the power right now to go develop your plan. Everything else has to come back. So that's, you've got what's in the state law, but you also have the ability to frame these CRAs through your resolutions that are adopted.
Good afternoon.
Good afternoon, Commissioners. I'm Rebecca Stonefield with Housing and Community Development. So the existing CRA I'll change that a little bit. The proposed CRA would be between US 19 west, from the east west over to, I believe the cutoff is Lincoln Avenue, and the northern part would be the Pinellas Trail going south to, I believe it is the Country Club Courts. The roads change. The existing CRA, the eastern boundary would abut the western boundary of the eastern boundary of the existing CRA would abut the western boundary of the proposed CRA, and goes west over to basically the water body that exists to the west of that. So let me see if I have the exact street written down here.
Western boundary would be the trail. The trail's is a north-south area through Tarpon.
I believe it,
Way up, is this south of Tarpon or the main road that goes through the main street? Pinellas Avenue's over here, but east-west, what's the main street that goes through Tarpon Springs?
right. The Pinellas Trail will curve up north, and that's where the northern boundary of the proposed CRA would be. It goes across, I'm sorry, I don't have the full size here, but it goes to,
So this is
Sun-
above and below Tarpon Avenue.
That is correct. I apologize, yes,
No,
that's
no, it's
correct.
okay, because you're right. At the northern end, it is an east-west.
That's
This
correct.
one, on this side, it's a north-south.
So that is a central portion of the CRA.
That is a large-looking CRA.
It is.
Okay. Yeah, I'd like to hear the presentation on Tuesday.
Absolutely.
Mr. Chair, if I could also point out, it is an advertised public hearing, so if you decide to postpone, you'll have to do that on Tuesday, out here on the floor.
Got it, okay. All right. All right, thank you. Any other questions?
And you'll have the other CRA where it's located? I mean, it's.
Yes. In the presentation, there's a map that shows the two of them and their boundaries directly shows where they are. And I'll mention that the existing CRA is 225 acres. The proposed is over 700 acres.
And maybe some commentary on the demographics of that area, because when I know Tarpon Avenue, everything south of Tarpon Avenue is definitely there are some areas that are coming along, but they could use some additional TIF dollars, and not as much on the north side of Tarpon Avenue. So maybe just some conversation about that as well.
You bet.
Maybe that will be some direction that we ultimately give them.
Okay.
Anyway, thank you.
You're welcome.
Thank you, Chair. Yeah, I support the idea of having a workshop on CRAs, because I think there's a lot of good info that could come out of that. So,
Yep,
yeah.
it's a good idea.
All right, thank you. All right, that concludes the agenda review. All right, it's been a long but a good work session, ladies and gentlemen, so thank you very much. So, unless there's anything else for the good of the order, y'all have a good weekend, and we'll see you on Tuesday.